All right, yo, what's up for everyone on the YouTube replay? I hope you're having a great Sunday. Let me start this off with a quick portfolio update, then I'll get into some few stocks that I think are pretty attractive to buy next week or this week, really. And then we'll look at some of y'all's stocks to get into. So, yeah, year to date, we are a little red. We're down 1.57% year to date in our main dividend only portfolio, where every stock in here, of course, pays a dividend. So, yeah, actually, every stock in here pays a dividend, and every stock in here pays a dividend except for Amazon. So I do like dividend companies, but most of these are dividend growth stocks where the yields are really low. But in 5 to 10 years from now, my yields on cost will be like crazy because they raise their dividends by double digits every year. So, yeah, this is my portfolio here. Here's my total percent change on every stock. Luckily, we are total return green on every company in here. We're just barely green on Carlisle Group right there. And then we have a Roth IRA. Our Roth IRA is not done well. We started this exactly a year ago, pretty much, and we're down 8% all time. And all those red declines really came from this week, really came from like Cavco specifically. They fell 20% on Friday. InnoData was down 12% on Friday, which I'm shocked. I'm surprised InnoData fell after they got the Palantir contract and the federal missile contract. So I'm actually shocked about InnoData. I'm potentially looking to buy more of that stock right there. But yeah, that's our Robinhood portfolio. Then we have our Webull account, kind of like our risk on portfolio, also not done too well. We're only up 12% all time in here. We have some big losers like UiPath, Sprouts Farmers Market's been struggling, Zoom. But we do have some winners in here as well, like AMD, Robinhood, SoFi, Dave. So some of these kind of companies. So yeah, Bitcoin is dumping. Yeah, that's not great for next week. Bitcoin kind of is like a high beta tech stock almost. And if Bitcoin's not doing good, I almost bet the NASDAQ is not going to be doing good next week. So yeah, Bitcoin's down 12.5% the past week, down 30% in 3 months. So yeah, down 25% the past year. So Bitcoin's done nothing for over a year, which is unfortunate. But yeah, that does not bode well for tech stocks tomorrow, as crypto is kind of seen as like a high beta tech stock almost. Like, okay. So then we have our Moomoo portfolio here. This is my buy and never sell account. Basically, every stock in here, once I buy it, I'm just going to never sell it for the rest of the time. So let me show you the first stock I think is pretty interesting to buy next week. And it's probably a stock you never heard of before, but that's the point. I don't just want to go over like Google and stuff, stocks you heard of. I want to go over companies you probably never heard of before. This is ticker symbol KNSL. And they have been flat for a year and a half since 2023. But the fundamentals have only gone up and to the right. Let me share with you what Kinsale Capital is. They traded a low valuation on the right there. They traded at a 19 forward PE. And it might actually be even lower than that because check out how they're beating on expectations these quarters. Analysts expected 446 million in revenue. They crushed it. They did 497 million this quarter. Same with last quarter, big beat. And not just beat on revenue, but on EPS. They expected $4.88. They did $6. So this forward PE uses these orange numbers and they always beat by 20, 30% on EPS. So potentially the forward PE is like a 15 here. And check out the bottom line. This is their after-tax net income, what you really want to look at. As we can see, it's at a new record over time. No wonder the stock has been such a massively well-performed stock since 2019, but it has been flat on the year. But they've been beating on expectations, so that's why I think this one's pretty attractive. They're not falling because the fundamentals are bad. They're falling because of just the whole market right now. Same with like a lot of the software names. So yeah, this is interesting company here. KNSL at a 19 PE, record profitability, flat on the year. So yeah. Okay, your money is way better off in equity than crypto. Yeah, I like stocks more than crypto because it's like you do get the dividend and stuff. And they stocks can do share buybacks. They report earnings. The kind of unique thing about crypto is Bitcoin. They don't report earnings. They can't miss on their net income or miss on their net margin. So it's kind of like this unique catalyst-free asset. But yeah, I don't actually own any crypto at all. I don't own any Bitcoin. If I was going to own crypto, I would just stick to the top, market cap ones like Bitcoin and Ethereum. So the next stock I want to go over is one potentially even more impressive. They fell 16% on Friday over they shouldn't have fallen 16% on Friday. So Apple Oven fell 16%. And same with Unity. All the game kind of companies did, but this is an advertising company mainly. Ticker symbol APP, Apple Oven right here. So here's their stock chart right here. They were down 16% on Friday, but they have the most impressive growth I've like ever seen for a company. This is why I want to introduce you to AppLovin because they have some numbers I think that you'll just find fascinating. So check out this quarter on the right. They did 1.4 billion of revenue. It grew 68%, but on this 1.4 billion of revenue, they netted an after-tax net income 840 million. So that means their net margin is a 60%. They have a better net margin than Nvidia. Like I cannot believe the net margin expansion we've seen on AppLovin. Like this usually always explains a stock going up or down a bunch and sustains the momentum as if the profits in the EPS look like this. The net income is just up and to the right, and not just the net income, but the free cash flow as well. They did $1 billion of freaking free cash flow. I mean, I couldn't believe it. So that's why I think AppLovin should be worth putting on your watch. It's at a cheaper valuation than SoFi now. Let me pull that up actually. Where's the forward PE ratio here? So you have 35 forward PE for the amount of growth that AppLovin has. I think that's totally justified. And check out the EPS projections. Like it was already a record $2.45 this quarter, like on the right here. $2.45, crazy record. They're expecting it to go to $2.95 and then $3.15 of EPS. I mean, the profits are just up and to the right. The expectations are. So that's why I think AppLovin could potentially be put on your watch list or even to nibble at current prices. Like I'm legit next week potentially buying some AppLovin because those numbers are just so good there. Okay. All right. Let's see here. Unity took a massive hit on Friday. Yeah, basically it was because of Google. Google is releasing like their own like game developer like network here. I wonder if I can find that news. Um, hmm. No, I can't find that news. But anyway, yeah, Unity, AppLovin, and I think some other names tanked on Friday because of that Google news. But it's stupid because only 30% of Unity's revenue is their like game engine business and the others like their advertising revenue. Same with AppLovin. So I'm shocked to see these down as much as they are. Yeah, look at that. Unity was down 25. Silver was down 28. AppLovin down 16. Some other like software names down. Yeah, Roblox. Dang, Roblox was down 14%. So, hey, what up, Ryan Mills? He says QYLD. So that one is actually a covered call ETF. So you would buy this to maximize your dividend income. So obviously, if we zoom out here, this does not look like the actual NASDAQ. So this will never outperform the actual NASDAQ because it simply sells calls on the NASDAQ and you really don't want to sell calls on them because it always just goes up 8 to 10% a year. So that's why this chart looks so terrible. So you basically, point being, you buy this ETF right here if you just want to maximize your dividend income. You just want the max amount of dividends. So you're not really going to get historically any stock price appreciation. You should actually slowly like lose money, but you buy that to maximize your income. Yeah, you're right, Dino. Google Take-Two, Unity. Yeah, I forgot about Take-Two. Yeah, that's the GTA 5 company. All right. Yeah, try not to spam there too. Hold on, man. I might have to mute you here. We'll get to Salesforce in a minute. Don't worry. Okay, because I have some more I wanted to look at first. So, should we look at Take-Two Interactive? That's an interesting one. But I wanted to get to WDC because this one is one of the memory shortage plays, kind of like a Micron, a SanDisk. So, let's see here. I think they just reported earnings. Yeah, so boost guidance. Okay, whatever. Let's just go look at their actual numbers. So if you're wondering why is the stock done so well, why has it gone from legit like $40 to $250? Well, it's because of the incredible earnings expectations. Look at this. They expected $1.75. They did $4.73. And this wasn't some one-time adjustment either. Like they really did beat that crazy on EPS. And the EPS projections are just up and to the right. $2.39. So it's literally going to go from 75 cents to $2.40. So the EPS growth expected here. Maybe they did have a one-time adjustment. I don't know. Yeah, so it says they made 1.8 billion. They didn't actually. They only made around like 900 mil in net income. This is the before tax number, but it was still a record quarter. So yeah, this wasn't real. They didn't. It was a one-time adjustment. Looking back, so they didn't actually make $4.73, but they really did make like $2. So yeah. What's the forward PE here? Because that's what matters. I know Micron's at like an 11. So yeah, 22 forward PE. So that's the crazy part. They're trading at 22 times next year's earnings. That's why this stock could potentially continue to stretch up a little higher. Like that's some pretty impressive EPS growth. 22 forward PE isn't super expensive. All right, let's do Salesforce. This is one of the software names. Hey, Ryan, do you want me to look at Amazon too? Yeah, Amazon's a nice one. Microsoft dropped 12%. Is it justified? Yeah, we'll go to Microsoft after this. I love that one. Hey, William. Shout out, William. Hope you're doing well too. And thank you to Rand for the roses. Sorry, I missed that. Thank you, Rand. So here's Salesforce. This is one of those software names that are just getting crushed by, the whole AI thesis. But they're at a cheap valuation now. Let me see. Guessing like a 28 or no, wow, 27 forward PE. This stock historically always trades at like 30 to 40 times forward PE, but because of the whole software crushing, with like Microsoft, ServiceNow, Salesforce is just following the trend. It's not like they're missing on expectations. Well, actually, they did slightly miss. They missed on revenue, but they beat on EPS and they beat on EBIT this quarter. So they have been expanding margins. Like, here's the best part about Salesforce. They're super profitable now. Because if we zoom out, they used to really struggle with profits back here, like barely make any net income. But now on the right there, the net income is very consistent. So that's why I think the 28 forward PE is starting to be very fair. Like, I don't really see it getting much cheaper. Like, I'd be shocked to see Salesforce at like a 25 forward PE. That would just be weird. They print free cash flow as well. They make more free cash flow than net income just because of how their stock-based comps work. But yeah, Salesforce really does make good profits, and they're very diversified as well. They're in services. That's up 9% year over year. Let me pull up the annual trend here. So yeah, the services revenue's at a record. Their sales business is at a record. Slack, has anyone heard of Slack before? Like Amazon uses Slack for all their employees. That's had a new record. One of the best acquisitions they've ever done. Integration, analytics revenue. So yeah, all the businesses are booming, and the net income's at a record, up 36%. And it really is. It means they expanded net margins. So that should be a record net margin. Yeah, on the right there, a 20% net margin. It's never been above that before. So quite impressive numbers on Salesforce. So it's not like Salesforce is falling because of their bad numbers. It's just the whole sentiment around the industry. And another cool thing is you get a dividend. You get 0.8% of your money back just in a dividend. What app? Yeah, hey, if you want to get this app, it's actually in the link in my bio, the link tree, very first link there. It's actually a brokerage where you buy stocks on my favorite app to buy. Okay. Yeah, broker called Moomoo. It's affiliate link. So, what was the next stock I wanted to get to? I forgot. Oh yeah, Microsoft. Yeah, dude, this is a steal. I mean, you can't, in my opinion, you cannot go wrong just buying Microsoft at current prices. Like, even at right now's valuation, I cannot believe the behemoth Microsoft is at a 24 forward PE. I mean, that's cheap. I mean, that's cheaper than Salesforce. Like Microsoft is cheaper than Salesforce. I'd rather buy Microsoft before Salesforce just because of how safe Microsoft is. Like, if I was going to pick one software name, I'd pick Microsoft. You can't bet against them. The stock has practically been flat since 2023 now, which is crazy. But check this out right here. Here's why. Microsoft's been flat since 2023, but all the numbers are up and to the right. Like, check out their basically software business, Microsoft 365, OneDrive, Office, Excel, all that. That does over 120 billion of annual revenue, and it grew to 34 billion, up 16% year over year. Like, it's incredible that they can still grow this double digits. I'm shocked. And not only that, but their cloud business, their Azure cloud is nearing up to where Amazon is in market share. That also does over 100 billion of annual revenue, grew 28% year over year to $33 billion. Like, it's not like the stock's tanking because of some slowdown. Like, revenue's up 16, profits are up by 20, so they did grow margins. So they make literally 28 billion plus of after-tax net income a quarter. Like, it's insane. Like, you can't bet against them. I mean, then they do dividends, they do share buybacks, they do M&A. They're buying, they're taking stakes into like OpenAI and ChatGPT. So here's the operating cash flow down here. That's how they can afford all their investments. Because yeah, they're spending 20 to 30 billion a quarter on these chips and investments, but it is covered by the cash from operating activities and the net income. But yeah, barely, most likely the net income. So yeah, great beat on earnings. Yeah, they beat on revenue, beat on EPS, beat on EBIT. So you legit can't bet against Microsoft. Every company in one way or another like uses Microsoft. So pretty crazy. All right. Hey, Josh, thanks for all the roses there. No way. I appreciate you, man. You know what? He said SoFi. Let me do SoFi because they did just report earnings on Friday. So, yeah, I wanted to talk on precious metals too a little bit. I don't have much to say, sadly. Um, I don't think it's time to buy silver or gold yet. But check out SoFi. They are down 7% on earnings, on some good earnings. It was actually a triple beat quarter. Like, check this out. The analysts expected 982. They did over a billion of revenue. Expected 11 cents of EPS. They did 13. The metric you watch on SoFi is this right here. This is the number that's been leading and justifying all this crazy stock price appreciation from $4 to 26. How did it justify a 5x? Well, it's this metric right here that beat all expectations. It's always the numbers that kind of explain the stock. Their financial services business growth is unbelievable. It's up 76%. Look at the middle, these year-over-year growth rates, like it's unbelievable. It's up 76%, after grew 101, after grew 141, after grew 80, after grew 600%. Like the growth is like unmatched here. And no analyst expected that. And that's why we can see they beat on analyst expectations every quarter. They print well over 100 million of net income every quarter. So that's why I think people are really starting to take SoFi serious. The top line's booming, the bottom line's growing. Like they're already profitable, very profitable, growing way faster than all the analysts expected. So that's why I think it's justified for SoFi to have a 34 forward PE. It's still a little pricey at a 34. Like you wouldn't go crazy on SoFi yet, but you honestly start the slight nibble on SoFi at current prices. Not if you wanted SoFi as 5% of your portfolio, you don't make it 5% at current prices, but you started at 1%. Because they do have that very impressive growth. So Captain Obvious says BURU, $430 stocks are hardly affordable. Well, that's why there's fractional shares. The share price is always irrelevant. The share price never matters, because every brokerage you can do fractional shares. So here's Boo. Actually, we're not going to cover this stock. This is some like micro cap. If you look in the very top right, they're only worth $90 million. They're at an all-time low as well. So these are just like usually a coin flip. Yeah, so kind of think about this logically. Here's why the stock's at an all-time low. If you're ever wondering like what caused this, it's simply the numbers. You kind of think about this logically. That's why we're not really going to cover this one. If you look in the very top right, the whole company is worth $91 million. Let's say you buy it. You buy it for $91 million. Here's what you just bought. You bought an asset that just the past 3 months lost you $22 million. So there goes over 20% of your entire investment. Then another $12 million, $16 million, $11 million, $5 million, $5 million. And just for all the time, they lose net income. And the worst part is the debt they have. Look at this. They have no assets. They have 5 times more liabilities than they have assets. So this is a pure swing trade kind of deal here. You definitely don't want to just buy and hold this stock because I'm almost certain it's going to go bankrupt all the way to zero. They have no revenue anymore. Look at that, 9,000 of revenue, and now it's at zero because that was the last quarter they could report. So they have no longer any revenue. They lose 20% of the market cap a quarter. So yeah, that's it's not what you want to see. But it could be a fun, maybe a little swing trade short term. But those I just don't touch those. All right. New Fed going to drop rates, not great for lender. Yeah, Warsh or whatever his name is. Yeah. Sony, what up, Joe? He said Sony. And hey, thanks again to Holy Man. Dude, thanks for the rose and Josh for those. I appreciate that. Any oil stocks? Hey, actually, Exxon's my favorite, but I have a Murphy USA stock that I own. It's an oil and gas stock. So one of the things hurting Sony, Apple, Nintendo right now are the high memory prices. And they can't really hike the prices because you can't charge, like, it's the same with like iPhones. No one's really going to pay over $1,000 for a phone, really, unless you're like love phones. But like they can't really raise prices, so they're just eating it in the margin right now. And so Sony stock has kind of been straight down because they own PlayStation. But I am honestly really excited about Sony's stock. Like the valuation is very fair. They're a Japanese company. And check this out on the right. They're at an 18 forward PE. So that's a very fair valuation, 18 forward PE. Here's their PlayStation sales. This quarter, they sold 3.9 million PlayStations. That quarter, they sold 10 million. But what's really cool about this is every time you go buy a game inside the PlayStation online like store, they keep 30% of that entire transaction. They basically just collect 30% royalties every time you go spend money on Sony games. But then they have a bunch of other businesses, like their music business. They have so many popular artists signed to them. That's growing nice double digits, up 17.5. That's like a weird way to get exposure to the music industry. No real other way to do that. I mean, I guess maybe Spotify, but Spotify doesn't own the music. Universal Music Group does, and Spotify actually pays royalties back to them. So, yeah, interesting here. They're in entertainment, music, gaming, and here's their bottom line. We've converted it from Japanese yen to USD. They really do make an after-tax net income, 1.5 to 2.5 billion in net income. So And I think you get a dividend. Yeah, look at that. A 0.69% dividend yield. And the payout ratio is only at 10%. So that's a very fair payout ratio for the yield. So there you go. There's Sony. I actually do like them. That's a cheap valuation. How much are we down this week? Or well, this week, well, there is no this week, but last week we fell yeah, we were down 0.99% the past week. Year to date, we're down 1.5%. Well, it depends on the portfolio. How are we doing in here? 1 week we were up 1%. Yeah, this portfolio is crazy. Year to date, we're up 14.8%. Okay. How's your crypto? I actually do not own any crypto. But I saw crypto down a bunch in the pre-market. So, oh yeah, what was it? Like an oil stock I wanted to get to. So, ExxonMobil's good. What up, Bubble and Jesse said RIP quantum stocks. Yeah, my favorite quantum stock, and it's not like obviously a pure play, but like I'd stay away from RGTI and QBTS. I'd buy, Honeywell, Google, and Microsoft. Those are like your best quantum plays. They have the money and the talent to be the industry leader. They're not going to get out innovated. Which your app you recommend for crypto and stock? Well, I recommend this app I'm on right now. I love the. I don't own any crypto, but you can do crypto and stocks. And here's my favorite app to buy stocks on and analyze actual stocks on. It's a useful brokerage. By the way, all these brokerages are all in the link tree in my bio. But yeah, if you want to get this app I'm on, my favorite one is free, costs nothing, no fees. Link tree in my bio. Very first link there, broker called Moomoo. So all right, let's look at some more stocks here. Some interesting names here. What do you think about the dollar? Will it strengthen or weaken? Well, you can see the dollar via DXY. Wait, is it not? Okay, the Dixie is how you normally view the dollar. The DXY, I think it's an index, so I don't know if I can view it on there. So yeah, this is the Dixie, the dollar index right here. So yeah, it has been down a bit. But whenever the price of the dollar goes down, it's actually good for stocks market caps because dollars are easier to get. So stocks market caps almost inversely go up. Whenever dollar goes down, market caps go up. Okay, bull stock. Let me do bull right here. I see like Kraken Robotics. Maybe we'll get to that one too. And Disney, yeah, I do own Disney stock. I think they do report earnings soon. So here's Webull right here at an all-time low. So they're at an all-time low today. Even though they're at an all-time low, they're not super cheap. They're not like a steal of a deal yet. But I own Webull stock. And here's the thing. You can't make Webull a meaningful size position in your portfolio. It's actually my smallest position. Like, here's the thing. I love Webull. They're at an all-time low, and I know they're overvalued, but I still want exposure to them via a super small size position. So yeah, my position in them is worth $480. We're down 18% on them. And actually, the past 2 days, I've been buying the dip. I bought around like 9 shares of Webull the past 2 days at its all-time low level. I'm trying to build a little bit more bigger position than. But even again, at all-time lows, they're still expensive at a 51 forward PE. But I'm more bullish on the analyst. I'm more bullish than the analysts are for Webull's numbers because I am a Webull user. So that stock bull we've been talking about is actually this app right here, publicly traded. I've been using their app for many, many years, since 2021. And I just noticed they just added this. This is what I don't think analysts know. Or maybe they do, but they're just not as bullish as me. They added in the prediction market and crypto to the app, like right around the time they IPO'd, like 2-3 months ago, or a little longer than that. And I think, this is what's printing Robinhood money. This is what's decoupling Robinhood stock from crypto, is Robinhood doing these prediction market contracts and crypto and the premium subscription, which I don't pay for. But yeah, Webull now has a lot more ways to make money, introducing new products like the prediction market, crypto, and cash management advisors, $4.99 a month fee and stuff. So, that's why I'm more bullish than the analysts are on Webull's numbers, and I think they're going to get to profitability like way more faster than analysts think. They're already profitable at a 51 forward B, but I think they're going to be making way more money than analysts think. Like they already beat big this quarter. They expected 137, they did 157. So yeah, Webull I'd keep very small, very low size position. But any idea on user growth for Webull? I actually don't know. I don't know if they give me those metrics. Any other app is what other? Yeah, all these apps are good. I like all these brokerages. They're my 3 favorite brokerages to buy stocks on. I have a video where I compare all of them on my YouTube. I'm also streaming on YouTube. All right, let's look at some more here. Why do you have multiple brokerages? There's no burden of having multiple brokerages because like I just have a different goal with each one. It's just an extra little it's an extra filled out 1099 form I just mail over in an extra envelope. So it's no big deal, no burden of having multiple brokerages. I just have a different goal with each one. Like Weeble's my risk on do whatever I want account. This is my buy and never sell portfolio, where once I buy stock in here, I never sell it. And then my or my Robinhood portfolio in the top left is called my dividend only account, where every stock in here pays a dividend. All right, let's get back to y'all stocks here. Static said, look into PURR stock. LX is a gym, although Chinese. Wait, I saw that one first. LX. Lex and FinTech. Let's do this one, Steve Rowe. And then we'll do PURR, WDC. Okay, so Lex and FinTech. Yeah, so he says it's a Chinese company. So yeah, he's right. We'll convert the currency from US dollars. So these Chinese companies always just trade at low valuations. Yeah, they're trading at 1.7 times net income. I mean, the cheapest valuation ever. And they do print net income. Look at that. We've converted this to USD, so this is in US dollars. They really do make 50 to 70 million of real after-tax net income a quarter. Looks like the top line growth is gone. You know, the sales, the lifeblood of the company. The revenue's down 8% year over year. But the profits, the net income, so they actually did have an adjustment. They must be making interest on their cash. So here's what you really want to look at. Revenue's down 8%. Profits are down by 11%. Yeah, after they fell 25%. So that actually means their margins are hurting a little. So that might explain why the stock has fallen so much, because, revenue's down, revenue's -8, profits are -11. But, I mean, they're still dog cheap. I mean, can it get much cheaper than 2 times net income? I don't know. But I just try to avoid the Chinese stocks. But you're right, they are cheap. And they're worth $470 million. Some sort of Chinese lending company. Do loans. All right, let me try PURR here. VOO or QQQ. Yo, I actually, both are great. I just picked VOO. But both are amazing. So here's, I don't know what this one is. Hyperliquid Strategies. Very small one. They're only worth 570 million, and they just IPO'd. So yeah, when we go to revenue right here, it says no data because they literally just IPO'd a month ago, barely. So yeah, I want to look at their metrics, but there is no data we can look at here. I guess they lost only $1 million, but yeah, I wish I could just give you thoughts on this company, but I really can't. Oh, it's another kind of crypto holding company. Operates digital asset treasury company. So it just owns a bunch of either Ethereum or Bitcoin, something like that. So yeah, real quick on the VOO, this is just the S&P 500. Most investors, hedge funds and retail investors literally cannot beat the S&P 500. So if you can't beat it, literally you'll feel so much better. Just own it as just 10% of your portfolio. I recommend having it as much of your portfolio as you can. Have this as the backbone of your portfolio, especially if you're new. But you'll just get 8 to 10% of your money back on average a year with the VOO. And whenever you underperform it, you won't feel as bad because you actually own some of it. So yeah, you can't outperform it. Well, you can, but it's hard to. And that's why I recommend owning it at least a little bit. What up, Craig? I love the Weeble app way more than Hood. Yeah, me. What's up, Option? Yeah, there's way more features. What up, Plasma? Good to see y'all. Hope y'all are having a great day. Yeah, let me get to the shortage one again. So we already looked at WDC. Let's get to Micron, because Micron and WDC are basically pretty similar. They're the same thing, both memory shortage companies. So they're actually projecting this memory shortage to persist through like 2028. Like this memory shortage is supposed to go crazy. It's hurting Nintendo, it's hurting Apple, it's hurting Nvidia, where Nvidia's raising the prices on their GPUs. Google's raising the price of their Google Cloud services because of this memory shortage right now. And this is why, even though this looks on a technical point of view overbought, it's not overvalued. Here's why. Crazy, call me crazy, but here's my thesis why I think Micron could potentially stretch up another 30% before it really maxes out, and maybe quite easily. If we look on the right here, this forward PE, they're trading at 10 times forward earnings. I feel like this forward PE could easily stretch up to like a 13 forward PE and send this up 30%. And here's where they get those projections from. Like, here's their EPS right now. This is already the crazy part. You see $4.60 on the right? That's a record quarter. It's never been higher, $4.60. Next quarter, it's supposed to be $8. And then the quarter after, $9. Like, the EPS growth expected because this memory shortage stuff is insane. So there's going to be literally like quadruple digit EPS growth coming. So they're going to be making over 10 billion in net income a quarter if these EPS projections are right, and they are. So, and they usually beat on earnings. So that's why I think Micron could potentially stretch up another 30%. If I was going to buy the dip on a memory stock play. Micron would probably be my top pick, more than like a WDC or like a SanDisk. I think both of those actually trade a double the forward PE. I think Micron's the cheapest memory shortage play and the most quality one. Okay, let's see here. But yeah, they all should do good in unison, like WDC. So Plasma, thanks for this. It says they aren't really the same. MU is DRAM, which is what AI companies need, but WDC needs memory to be short. Okay, so we're talking about RAM, memory. Okay, I appreciate that. But yeah, it's this whole shortage that's sending these EPS projections to the moon. Let me do Kraken, KRKNF. So, I don't know if I can view this one. They're a Canadian. I don't know if I'm gonna be able to view that stock. Kraken Robotics. I don't think their ticker works. Yeah, unfortunately, I tried for you, but I don't think I'm gonna be able to view Kraken Robotics. KRK. That's weird. Wait, did I type it in wrong? KRKNF. Huh. Yeah. I just can't view it on here. That's so weird. I wish I could help you out there. If you got another stock you want to look at, let me know there. All right, let's look at some more here. Hey, what up, broke boy Hondas? What's up? Been 250 a week in Google. I love the dip. Yeah, yo, this dip is great. What up, 6-star? And Marcus, he said USAR. This is your rare earth mineral play. I think the U.S. government took a 10% stake in this company. Let's see. Yeah, USA secures $3.1 billion in funding through private placement and government investment. Yeah, USA Rare Earth partners with the DOE, Department of Energy, to develop digital twin technology for rare earth separation. USA plans Oklahoma magnet plant commissioning in 2026, secures rare earth oxide supply agreements. So USA, okay, pretty cool. The administration withdraws price floor guarantees for critical mineral projects, including USA Rare Earth, projecting 60 million of losses for 2025. So maybe that was one of the catalysts that sent USA Rare Earth down. I don't know if it's because the administration removing the floor guarantees, the price floor guarantees. But anyway, yeah, this one's still kind of no revenue here because, they still haven't got their minds up and running. But, I guess if the rare earth mineral, like geopolitical landscape, like China warfares escalate, this one should be a decent hedge, because right around here, China was making it a pain in the nuts for any U.S. company to get any of their rare earth minerals, but then they removed the permitting, and that's why the government took a stake into MP Materials and USAR and LAC to try and bring our own supply back to the U.S. But I guess that's gone. Anyway, I'd be careful with this one. I wouldn't have it as a major big size position, just because like they still don't have any revenue, and it's not going to come for a while. So it's kind of but they're definitely going to have revenue in the future. But it's just like, Oh, it's PNG. Okay, yeah, PNG is the. Thank you for that. You know what? Whoever said PNG, Chiobu, thank you. We found it. Kraken Robotics right here. Pretty interesting. Is there any news around them? So this is like they're not really a robotics company, but they market themselves as that. They're like an underwater mission company. Like they it's not really robotics, just like heavy machinery that they man on, like they control it really far away. So I guess that's why they call it a robot. But yeah, they have like these underwater sensing, imaging, LiDAR systems that like just collect data, survey data from under the water. Something like that. I don't know. Here's kind of their website right here. A little interesting. So some underwater thing. Here's the cool part about Kraken Robotics though, which I really like, is the fact that they are already profitable. They're not losing money every quarter. So they're actually net making, the last quarter was only 500K, but they still made money. They didn't lose money, which is pretty cool. And this quarter, the revenue was 22 million. I think that's a record quarter. Let me zoom out here. Yeah, record quarter of 22 million of revenue, 22.4 million. Next quarter, it's supposed to be an even crazier record, 35 million of revenue. And then the quarter after, 30 million of revenue. So that growth is just really nice on P&G. So that's why they're one of like my more favorite smaller robotics names. That like I wouldn't really buy a Rich Tech Robotics. I'd be careful with like a Serve Robotics. I like P&G a lot better than those because they're already profitable. They're not losing a boatload of money. So thanks again, Jackson Hoover, for the crazy roses. He gifted like 20 roses. No way, man. He says MNDY. I got you, man. I appreciate those gifts there. So here's Monday.com, kind of like a Salesforce where they're just getting crushed. All the software names are. So it's not just like a Monday.com problem. It's all of software that's getting hurt, including Microsoft. Let's see. Is there any sort of, when do they report earnings? I wonder. So anyway, let's see. Yeah, they've been beating on expectations every single quarter. So they're not going down because, the numbers are bad. Yeah, that's what you want to see for growth stock. Check out how consistent that revenue growth is. It just hits a new record every year, every quarter. And let's check out the profits. So look at that. They are finally net income positive. It's getting more and more consistent. It's still sometimes a little choppy, but they really they're no longer losing money every quarter. So I expect the forward PE to be super expensive here because they're just now getting net income positive. Let's see here. So yeah, 103 forward PE. So that might be a little bit expensive, definitely expensive, but it's a software name. Here's the thing. A lot of software names are all at this 52-week low level. I think there might be cheaper software names to buy at a 52-week low, like Microsoft's at a 24 forward PE, and Salesforce is at a 26. Like Salesforce is also at this 52-week low level. I think Salesforce might be a little bit of a safer buy than Monday.com. But yeah, they're not struggling because of their numbers. It's just the industry issue. Like here's Salesforce, for example. Let me pull that up real quick. Look at this. They're also at like this new 52-week low level, multi-year low. Yeah, hey, I do want to get to CG. There's a lot of stocks I want to get to. I'm reading both the YouTube and the TikTok chat. I appreciate everyone here. Rustro says, what app is this? Yeah, hey, if you want to get this app, again, it's a brokerage where you buy stocks. It's in the link tree in my bio, the very first link there if you want to get this app I'm on. Okay. I'm a little behind here. Okay, someone said fuel cell. I think this is I think this is like a micro cap kind of meme stock. Oh hey, when I got this app, yeah, if you want to get to that with my affiliate link, you get like some free stocks, and I got like this free stock, and dang, it was at $63. I guess that's stock split adjusted. But anywho, I think I know why this stock is at an all-time low. The numbers explain it, sadly. If you look in the top right, I'll keep it super basic here. The whole company's worth $390 million. Here's the bad news. So the whole company's worth $390 million. They lost $30 million this quarter, 90 mil last quarter, 40 mil, 30 mil, 30 mil, 40 mil. So just for all of eternity, this company loses like when you're only, what was the market cap again? Like 300 mil? Dang, when you're only worth 390 mil, losing 39 million is 10% of the market cap. So they've lost in the past year almost like half of the whole company in terms of like market cap and net income. So it's just a tough one to trust. Luckily, they actually do have a good balance sheet. Is that from stock issuance or something? Yeah, so they have been diluting the shareholder by a lot to raise funds to pay off these net income losses. So you're in a scenario where there's almost like a for sure bankruptcy chance here, diluting you while the stock's at all-time lows. It's a tough one. Yeah, I'd be so careful just for those net income losses. I don't like companies that lose like so much of their market cap in net income. It's kind of scary. All right. What should we look at? Let me do CEG and white fiber. Hey, what's the ticker symbol for that stock? If you have a stock, give me the ticker symbol for it and we can look at it for you. I got you. And hey, thanks again, Alex Gill. No way, dude. I appreciate those gifts there. You try Prime. Yeah, hey, Alex, give me the ticker symbol for Prime. I don't know what that is. We'll check it out, though. So here's CEG. I do own this company, full disclosure, so I might be biased. But CEG, this is your number one nuclear play. If you're looking for a utility stock, this is my favorite utility of all time out of any utility stock to exist. 75% of the revenue comes from their nuclear reactors. They own 30% of all the U.S.'s nuclear reactors. It's the purest play. There is no close second. And but they're really cheap right now. Let me pull up the forward PE on CEG. Yeah, 25 forward PE. I think that's very fair for a utility, or especially a nuclear utility. Like with these irreplaceable nuclear plants, these fully amortized, fully paid off nuclear plants that just print money every month. Like these nuclear plants were built decades ago, and for the first decade they run for the whole decade at a loss, but after that first decade they just the money just prints up after that. So anyway, CEG, my favorite utility play, 25 forward PE. They just acquired Calpine, and this Calpine acquisition is $2 accretive to yearly EPS. It's insane. So I have nothing bad to say about this stock, except for one recent sort of news. If you're wondering why did the stock dip recently, the administration came out and said we want to limit how much these unregulated utilities can charge these corporations. So they're basically trying to make corporations sign 15-year deals with CEG instead of like month to month kind of prices change based off what the demand is. So I don't know. That's some news on there, but it's not going to bother me. All right. Thanks again, Alex, for the gifts. He says PR. I hope I can find this one for you. It's kind of a weird ticker symbol. PRYMY. Oh, we found it. Okay. So here is the stock. I'm glad we found it for you. So they're actually at an all-time high. So, congrats if you own this company. You got to be up on your shares. They're trading at 25 times current PE. So they're obviously a European ADR. So let's convert the currency from USD or to USD just to get a bit of better eye picture. So they're an electrification play. I bet this business is booming. Yeah, with the whole AI boom, the power grid, transmission revenue, digital solutions. So yeah, here's where the revenue comes in. North America is 31% of the revenue, EMEA, Italy. So let's check out the bottom line here. Yeah, whoa. The profits really have grown. This is basically their net income right here. It's at like the past 2 quarters specifically have been incredible for the company, record profitability. So I can see why the stock is at an all-time high because the profits are at an all-time high. So yeah, revenue's up 16% year over year to a record. So yeah, no complaints here. And I'm really bullish on, AI taking up a lot of demand, from the grid, the whole electrification business I really like. Let me get to, okay, someone's been saying WYFI. Let's do this one real quick, then we'll get to GE I love GE Aerospace, like irreplaceable. Yeah, let's do GE after this. And what up, Craig? Yeah, we'll do CPK, don't worry. Sorry if I'm missing stocks. I apologize. I'm trying to get to all these. There's just so many. So here's White Fiber right here. They're only worth $750 million. That's a small market cap. So just beware. They're only worth $740 million. So let's go see if they're profitable. So they're a cloud company. They do cloud services, maybe it's like a smaller Amazon cloud. So yeah, the revenue's up. Let's see, are they profitable? So the revenue's up to 20 mil. And on that 20 mil, they lost 15 mil in net income. They have a great balance sheet from diluting you. So Bit Digital, isn't Bit Digital a publicly traded stock? Bit Digital is the largest shareholder here, 70% of the company. But this, I'm guessing, maybe used to be a Bitcoin mining company, but then they basically just converted all their GPUs to, cloud hosting, cloud services. Anyway, I wish I could give you more thoughts on this company. I guess it's just like a smaller, pure cloud play. But, my cloud plays, I got Google Cloud, Amazon, AWS. They're going. They have some big competition. Let me get to GE Aerospace real quick. So this company, they repair and service these commercial engines, airplane engines. And, whenever there's the slightest dink in any one of the engines, components or whatever, they got to redo the whole safety verification system. So yeah, if we go to their commercial engine and servicing business, this is what's been booming. It's at a record up 26% year over year. How about their other business? So yeah, and they're in like an aerospace and defense play, defense propulsion technology. That's up 26% year over year. They've gotten some nice government contracts. GE Aerospace faces $121 million tax benefit reduction due to global minimum tax agreement. Paid more taxes in Singapore than any other country on a cash basis. Okay, well, anyway, let's go look at the numbers here. So yeah, check out this beat the past 3 quarters specifically. So no wonder the stock has been doing so well the past 3 quarters in a year and a half, because they just beat on expectations every quarter. They expected 11.1, they did 11.8. They expected $1.57, they did $2.30. Like, check out these EPS beats. That's got to be the most impressive thing here, the bottom line beats. So if we go to the revenue grew by 17, but the net income is up by 35. So what does that mean in English? That means they're expanding margins. Record 20% net margin has never been over 20% before. So that's really impressive. Yeah, so That's interesting here for GE Aerospace. And what's the forward multiple? I bet they're a little expensive. Yeah, 37 forward PE, but they always beat on EPS projections. So, that 37 forward PE is using these orange numbers and they always beat like crazy on the orange numbers. So, yeah, 2 quarters profit's supposed to just explode. So, I have nothing to complain about over here. Yeah, stuff looks great. Do you have a Discord where you call a signal? Not really. I do have a Discord, but it's in the link tree in my bio, but I don't really see, there's only like 10 people in there. But yeah, no. Now I saw nothing. I have no course book, WhatsApp, Telegram. I'll never follow you, DM you. I don't have really any private coaching group, nothing like that. I have a Discord, but I mean it's like no one's in there. Because I don't want there to be many people in there. I kind of like it with only 20 people in there. Okay, let's see. What should we look at next? Oh yeah, wait. I wanted to get to CPK here for the homie Craig. He said, "Oh, Chi Speak utility." So yeah, this is a regulated utility, and these regulated utilities usually just give you around 6 to 7% of your money back every year. They don't outperform, the tech-heavy S&P, but you get 6 to 7% of your money back a year. A nice dividend too. You get 2% of your money back just in a dividend every year, growing dividend. So yeah, regulated energy. So let's see, the revenue's up 12%, and here's the net income. Yeah, so they're making like 30 to 50 mil in net income a quarter. Not too shabby. And it's grown year over year. All the year over year growth rates are positive, so it's a great increase in the previous year. It's the valuation, a 19 forward PE. Yeah, that's about normal for these regulated utilities. Another great ETF, might be a better play. I don't know, more diversified play. You get a slightly higher yield. You get a 2.68% dividend with the VPU ETF. And this ETF doesn't even include the reinvested dividend, so the chart actually looks much better. Yeah, you get 2.7% of your money back just in a dividend, and it breaks your money up for you into all the utilities. So, like this ETF almost will guarantee, well, not financial advice, but just give you 7% of your money back for the rest of the time on average. So, yeah, there's VPU. I actually own a few utility companies. I actually own Southern Company, SO, right here. Oh, wow, we're already up 4.5% on them. This one has a bit of a high yield, a 3.3% yield, so a higher yield, and a 21 forward PE. So, similar valuation, higher yield, potentially more growth. I love their, we're a customer of them. So, all right. Lopez, what's up, man? He says thoughts on Google earnings. Yeah, next week will be crazy because we get Google earnings. Let me pull this up actually. Yeah, we get on Monday we get Palantir, Disney. Yeah, Tuesday AMD, Nintendo, PayPal, but then Wednesday is Google, Uber. Thursday's Amazon. So yeah, we'll be streaming every day this week. If you wanted the follow button, I appreciate that. We'll be looking at the earnings. But yeah, Google, I'm super excited for their earnings. I am a shareholder of Google. They're my second largest holding. They grew to that size. I mean, you can't bet against Google. They're like a mini OpenAI. Like they've beaten OpenAI slash ChatGPT at their own game. It's pretty insane. And they're not like crazy expensive at all-time highs. I mean, a 31 forward PE on Google, that's not too nuts. I mean, I'm certainly not buying shares at all-time highs, but I mean, I wouldn't be shocked to see them continue to climb higher. And check out this net income right here. This is the best part about Google. They are just so profitable. They make 25 to 35 billion of real after-tax net income a quarter. Like, like it's insane. So what is Google doing with, 30 billion in net income a quarter? Well, they pay a dividend, and that dividend only costs 2.5 billion. So they have so much room to raise the dividend. But the other best thing about Google is the share buybacks. They spend literally $15 billion every quarter solely just buying back their own stock. I mean, it's crazy. And they invest in AI, invest in the future. Like, I love that they have a low dividend payout ratio so they can invest in the future, have a lot of high dividend growth, do share buybacks, invest in the future. So I just love Google. Can't bet against them. I like ETF in one. They own Google, they own Android, Google Cloud, Wiz, Waymo. They're in quantum chips. TPUs are huge for Google. So AI play. So yeah, Waymo seeking $16 billion in funding at $15 billion valuation. And they own 7.5% of SpaceX. If anyone's heard of that, SpaceX before, they're trying to merge with Tesla. SpaceX, 7.5% of it after all the dilution. Google owns 7.5% of it. Okay, let's get back to y'all stocks here. So SoFi dropped low lately. Probably going to buy some leaps. Yeah, SoFi I do really like at current prices here. All right. What do you think of LH said? What do you think of Novo Nordisk? And then we'll try and get to some of these other names here. Oh, and Palantir going to be interesting. Yeah, Palantir for sure. So Novo Nordisk, this is your weight loss play. If you're interested in like Ozempic, this is the company that owns Ozempic and Wegovy. So literally pure weight loss play. 94% of the entire business is their diabetes and obesity care products. So literally Ozempic, Wegovy. Yeah, Novo Nordisk launches oral Wegovy pill and strong market adoption. They actually have it on Amazon now, which is pretty cool. Novo Nordisk significantly increases U.S. advertising spend for weight loss. Yo, so that's kind of, I'm so bullish on advertising. Meta, Netflix, Google. I really like these names right here. So anyway, yeah, Amazon too. So yeah, Novo Nordisk right here. There's a few things hitting this company. Like before today, like why did it go from 138 to $50? Well, there's a few things here. They lose their patent exclusivity for Ozempic in a couple years. I think they lose it for in Europe for 2028, and then in 2030 they lose it for the U.S. and China. So they're losing their exclusivity on their main product, Ozempic, their weight loss company, and they just agreed to lower prices like crazy on Ozempic because it just got added into Medicare, Medicaid, and they agreed to cut the price by like 50, 100%. So when we go to the revenue this quarter, analysts expected 12.11. They only did 11.7. So they missed big on revenue. So here's the thing. The revenue grew 10%. So the revenue's up 10%, but the profits, the net income is down by 22. And that wasn't some one-time adjustment either. Like the real operating profit, the profits fell 26% year over year. So this is a margin issue now. The net margin is down by 30%. It's a 26% net margin versus a 38% net margin. So the net margin fell by 12% year over year. Gross margins are down by 10%. So those price cuts are really hurting their bottom line. And so when growth is getting cut, that's why the forward PE is now a 17. That sadly, the sad truth is a 17 PE might be fair for a company where margins are going down, competition's increasing, exclusivity is going away. I would just be careful, but I really love the new recent catalyst of the Wegovy oral pill. There were delays for the Zepbound pill, so basically they get to run competition free till like April for their Wegovy pill. But and then again, they still print money. It's not like the end of the world here. They still make in U.S. dollars $3 to $4 billion in net income a quarter, but it's just the future expectations are a little questioned here. And wow, you get a 3% dividend. I didn't realize the dividend was that big there. So yeah. 3% yield. So it's a mixed bag there. I'd keep the allocation of that one a slight bit low because there are some things that worry me here. Yeah, Hims. So Hims on the news that actually here's the freaking crazy part. They used to sell Wegovy and Ozempic on Hims and Hers website. So Hims and Hers, you buy a bunch of health products on there. Almost it's kind of crazy now where Amazon is like a mini Hims and Hers. There's just so much competition for this space now. So that Novo Nordisk stock used to sell Wegovy and Ozempic on Hims and Hers website. Now they dropped that. They no longer sell it on Hims and they sell it on Amazon. Isn't that like RIP Hims? So yeah, the profits on Hims will just never be the same, unfortunately. That's why I can't touch Hims and Hers stock. Hi, would you like to check something between ASP isotopes? Appreciate your supervision. Also the energy. Oh, hey, thanks, 1998. I appreciate you. Yeah, which one should we look at there? Let me know which one you want me to look at there, 1998. We can look. Give me the ticker symbol. I've never heard of ASP isotope aerogels. Give me the ticker symbol for a stock, and we can check it out for you for sure. All right. Yeah, let me do SoFi really quickly because this one's kind of popular. I'll be super quick with this one because we already went over them. And then we'll get to ALMU after this. Hey, what up, man? Yeah, we'll do ALMU. I saw someone saying that one. So SoFi right here, they just reported earnings. If you're a shareholder, the metric you watch on SoFi is this right here because this is what's leading to all the growth in the stock and the high multiple. This is what justifies the high multiple, this growth. The financial services growth in the middle here, these year-over-year growth rates are unbelievable. Like I can't express how impressive this is. It's up 76% after 101, after 141, after 80, after 600. So no analysts were expecting this sort of consistent growth, like for it to just continue. It's now 420 million in revenue just this quarter, which is 1.2 billion a year annualized, and already the annual revenue is 1 billion. So it's so. I'm even more bullish than the analyst expectations are. That's why they're beating on revenue every quarter, beating on EPS every quarter, because their financial services keep beating so massively. So that's why I think people are taking SoFi serious. They're making 100 mil plus in net income a quarter easily. The top line growth is growing very massively. So they're a nice growth stock, a really nice growth stock. And the forward PE is still slightly pricey, but fair enough to start slowly nibbling on SoFi at a 34 forward PE. I am a shareholder of SoFi. I'm up still. I regret every share I've ever sold of SoFi. I'm still up like 281% on my little remaining shares, but that's why I wouldn't go crazy on SoFi yet, but that they have the growth to justify that 35 PE. ALMU, what was that one real quick? ALMU, Illumina. Okay, or I've not heard of this stock before. They IPO'd like a year and a half ago. What do they do exactly? Let me see. Do they have revenue? They do have revenue, but like no revenue. They do $1 million of revenue a quarter. You know, they did 1.3 million. So you got to be so careful just because like they're pretty much a startup, you know, innovating at the chip level. Well, here's their website. Illumina files new patent that enhances intellectual property for large-scale, high-performance semiconductor manufacturing. Well, I don't know. Maybe they are manufacturer, semiconductor company, high-performance technologies. Maybe they're not a manufacturer. I don't. They have 14 employees, so you're looking at it. It's just such a small company where it's just hard to trust. You know, 14 mil or 14 employees, 1.4 mil of revenue. Actually, they're not losing any money. That's actually impressive. They legit only lose $1 million a quarter. That's really good. I thought they'd be losing a lot more. So to barely be losing any money is fantastic. Plus, this good balance sheet, probably from stock issuance. Yeah, so that's all at the expense of the shareholder, but there's no chance of bankruptcy after they just fortified their balance sheet. It's a tough one. I'd be real careful here, but I mean, I guess as long as they keep up this revenue growth, I mean, we definitely want to see these numbers get way bigger and, you know, they don't lose any money, then maybe, I don't know. It's not the worst one I've seen out there. Because they really don't lose any money. It's impressive. A semiconductor ETF, yeah, that'd be like SMH right here. So yeah, what's kind of cool is, you know, if you don't know whether should I buy Nvidia or AMD or should I take advantage of the memory shortage and buy Micron or something, well, via this ETF, you can just get exposure to the whole basket. You know, Nvidia has been flat since this day right here, since July 1st. But this ETF has only been up and to the right because of the memory shortage stocks like Micron and SanDisk picking up their slack and going up a bunch. So that's what's leading to this ETF going up. So it's almost like this ETF has basically done better than Nvidia because of the memory shortage stocks. So yeah, obviously I wouldn't probably buy this one at all-time highs, but next time we go into like a huge crazy chip recession or tech sells off like crazy, this is an ETF you can put on your watch list to potentially buy the dip on. Hey, bro, how are you? Hey, Mitchell, what's up, man? I'm doing great. How about you? Hope y'all are having a great Sunday. BOA or Bank of America just downgraded SoFi. Oh well, that doesn't bother me. A Monkey D. Luffy said CCOEY. We found it Capcom. Isn't that like a gaming convention thing? Or I don't even know. Let me see again what this company does. Sale of home video online mobile arcade games. Yeah, some kind of like event thing. Arcade operations, Plaza Capcom, amusement. So let's go check out if they're profitable. That'd be interesting. So digital content, amusement facilities, how's that doing? Well, hey, on an annual basis, that's at a record for the full year 2025. Amusement equipment, that hit a crazy record in 2025. And then digital content. Well, let me convert the currency from Japanese yen to US dollars. So this is a Japanese company. So we'll convert the currency to US dollars. So revenue is, yeah, so they are profitable every quarter. Check that out. They're making, you know, it's a little choppy, but I mean 60 to 100 mil in net income a quarter. So what's the forward multiple? I don't think there is a forward P because no analysts cover this one. Yeah, so there's no EPS projections, but the current PE is a 25. They traded 25 times net income. Huh. It's a niche industry with a great balance sheet. Yeah, deleveraging too. Fortress balance sheet, like basically no debt here. And they make 70, 100 mil a quarter. So not too shabby, actually. Interesting. SLDP, please. What's this one? Oh, Solid Power. Hey, this one's on my watch list. I forget why I put it on my watch list, but let's go figure out why I like them. So they are worth 850 million, so still a really small market cap here, but are they profitable? Not yet. and they have no revenue. Huh. So I don't know why I put them on my watch list because so if we go to the revenue, this is not good. So the revenue's down 20% year over year. They only had 3 mil of revenue and they lost 25 million. That's a lot. So this whole company's worth 855 million, but good news is the balance sheet that they have $250 million of cash and no debt. So basically, 30% of what you're paying for, 30% of the market cap is just their cash on hand. But I don't like the fact that they're burning through like almost 100 million in net income a year and they have no revenue. And the revenue's not increasing. The revenue is actually down 20% year over year and it's so tiny. So it's actually more bad than good, sadly. I might actually remove them from my watch list. I don't remember why I put them on my watch list, but maybe it's for the cash they have on hand. But yeah, these numbers aren't really great, to be honest with you. Wouldn't trust them too much with anything crazy. Hey, what up, Tish? All right here. What you prefer and think of being? Well, let's see here. He said QMMM. I've not heard of this stock before. Let's try a QMMM. So yeah, this one, they've been booming. So there was obviously some sort of good news right here. The stock literally went from $10 to $300, and now it's settled down at $119. So there was obviously some sort of good news here. Without that news, I really don't know. I can't give too much comments on this stock. I mean, I don't know what QMMM does. Provision in digital media advertising. So they have no revenue pretty much. Yeah, dang. So the revenue is 1.2 million for the first half of 2025. So for the first 6 months of 2020, or this is fiscal year. So for basically the past 6 months, they did only 1.2 million revenue. They lost $1 million. Yeah, I'd be real careful here. Oh, and they're a Chinese company. So they're headquartered in Hong Kong, China. So yeah, but I mean, there was some sort of good news here, but I just don't know what that news was. Some sort of momentum company. I'd be careful there. ALME works in semiconductors and Face ID tech. A lot of companies use. Oh, interesting there. They own Monster Hunter, Resident Evil. LAES. You said does. Wait. Let me try. I think you're talking about this stock. I don't know. Let's see. I think this is like a quantum stock. I have no clue though. Acquire, hold, and dispose of interest in national and international entities. So maybe they do own some of that. So maybe you can check out their website right here. Quantum company. Yeah, I thought this was like a quantum stock, but maybe they own some video game too. I have no clue. They have 67 employees. So let's check out the revenue here if they have any. Revenue is, yeah, so not good. So the revenue's actually declined since 2023. Yeah. No revenue and losing net income. I wish I could say bullish stuff, but nothing really there is blowing me away. I don't know. Do you trade OTC stocks? Not really, or actually, no, I don't. Yeah. Ooh, Netflix. You know what? And Palantir. You know what? We got to get to Palantir and Netflix. Let me do Palantir first because, yeah, Palantir reports earnings on Monday. And, yo, hands to Crispy. Thanks for the gift there. I do appreciate that. So, yeah, Palantir here. This is a great AI play. A lot of the revenue actually comes from the government. A lot of police stations and the military, the Air Force use their software. And check out the government revenue growth. It's increasing. Like the growth rate's growing, which is really impressive. The government revenue's up 55% year over year. After grew 33, after grew 12. So yeah, literally the growth rate is growing year over year on the government revenue, but that's not the most impressive part. It's actually the commercial side, which is 46% of the revenue. It grew 73% year over year. This is what explains Palantir having such crazy stock price appreciation. They have a crazy, insane high multiple. Let's see what the forward PE is. So yeah, 190 forward PE, like Tesla type expensive, but a company with this sort of fundamentals deserves a high multiple. Like the revenue just hits a new record every quarter, the net income hits a new record. They have no debt. debt-free company, 6.8 bill of cash. The cash is earning interest, record free cash flow, insane margin growth, margin expansion, beating on every metric every quarter. No wonder this stock has done so crazy. But unfortunately, they're really pricey, even on the dip. But I'm really curious. I'll be watching their earnings on Monday. I think Disney reports at the same time. Oh yeah, let me do Netflix real quick. So Netflix, this is a great advertising play. They used to have a subscription model where you pay for a subscription and you don't see ads, but now there's like two tiers. It's like a cheaper tier subscription where you pay and you see ads, and a normal tier. And they actually make more money on the ad tier subscription. And they're at a new 52-week low today, nearly. And it's a simple business to understand. You basically pay. It's a subscription model company. You pay them every month. They actually have crazy data here: 301 million premium subscribers. They literally make $11.69 per month per paying membership, which is pretty nuts. Oh my goodness. All right, TikTok saying I'm AFK. Okay, hold on here. All right, sorry if it went out for a second. I had to fill out a CAPTCHA, but we're back. But yeah, Netflix, they literally make in after-tax net income every quarter an insane amount, easily 2 to 3 billion in net income a quarter. So like they're so insanely profitable, and they print free cash flow as well, 2 billion plus a free cash flow a quarter, 2 billion to 3 billion in net income a quarter. That's how they can actually afford to do this acquisition. They're actually trying to acquire Warner Bros. Discovery. So they're proposing an $83 billion all cash bid, but Paramount Skydance is bidding around $100 billion. So the more Netflix has to pay and the price goes up, the more decretive it is to Netflix's EPS. But whether or not they do the acquisition or do not do the acquisition, Netflix is cheap in my opinion. If we go to their forward PE, basically they're trading at 26 times next year's net income. For Netflix, I think that's very fair. Like the risk reward is super good. Like I don't see it going too much lower. Like it'll probably fall another little bit, but like I don't see it falling that much more. Like the risk reward looks pretty good here. Like a lot of people would cancel their Netflix subscription last. So yeah, if you pay for a Netflix subscription, why not own some of the stock as well? Because they're really profitable at a fair valuation today. CCOEY owns Resident Evil and other games. Oh, okay. Thanks for that, Luffy. I didn't know. I was slow there. Cortez says MCK. I think that's Merck. Or oh no, this is McKesson. Oh, this is that like delivery company, like medical delivery company. Wow. This stock is at an all-time high, like supply chain solutions kind of company. So yeah, I think it's like a low margin business. Let me see what their net margin is. So yeah, they run, look at this. Historically, they're lucky to have a 1.5% net margin on average. So yeah, they run at around a 1% net margin, but that's all they need. That 1% net margin makes them a lot of money, 800 million to a billion a quarter. So imagine they get like a 2 to 3% net margin. I don't think they ever will just because of how competitive. But yeah, the total revenue is 103 billion. On the 103 bill of revenue, they netted 1.16 billion. Let's see. So they paid a 22 forward PE. That's fair. I mean, like even though this stock is at an all-time high, I mean, a 22 forward PE, that seems pretty fair to me. And a 0.35% dividend yield, only a 10% payout ratio. So yeah, medical distribution business is what they're in. I'll actually add them back to my watches. Yeah, 22 forward PE. I wouldn't be shocked to maybe see them just continue to climb higher. Wow. Yeah. Palantir's PE doesn't matter if they can keep the 40%, 50% growth. Yeah, you're right. So they're having this year's like 40% growth. But yeah, when you look at the PEG, the price to earnings growth ratio on Palantir, it is expensive, but they certainly deserve a higher multiple. So Capcom owns Monster Hunter. Okay, yeah. I'm slow there. Wait, what is this? Can you do HUD? Oh, that's Hut 8 Mining. So basically, this is a Bitcoin mining company. So basically, this company owns a bunch of NVIDIA GPUs, and what they're there's nothing proprietary here. They literally just own a bunch of NVIDIA chips in a data center. But right now, those their GPUs are in such demand from cloud computing companies where they're renting out the capacity of the GPUs instead of just mining Bitcoin, because that's all they used to do. They literally 100% used to only mine Bitcoin. I remember them years ago. Now they're doing this cloud computing business as well, getting into that, which could make them more money. So, wonder how much Bitcoin they still have on hand. Yep. Well, the balance sheet's pretty decent. So, yeah, I don't. I don't know what to say about this one. This one will probably just kind of follow like a core weave. It's like a smaller iris energy. So, yeah, GPU play. McKesson's a great business, very common in hospitals and drug companies. Yeah. HUT is a call option on Bitcoin. Yeah. You know, what I've normally seen is like HUD 8 and, well, all the Bitcoin mining companies don't actually outperform Bitcoin in the long run. Like I always usually see Bitcoin outperform the Bitcoin mining companies, but with the whole cloud business, like Iris Energy used, I think still 80% of the revenue is still Bitcoin mining. But the reason they got up so much is because they got a huge deal from Microsoft to rent out their GPUs for cloud. Flasso says GWRE. What's that one? Guideware software. Have you talked about CEG? We have talked about CEG, but we can um, look at them again. Do you use PEG ratios when picking a stock or thoughts on the price to earnings growth ratio? Yeah, I basically just look at the price to earnings growth ratio to see how expensive or inexpensive a company is or what you're paying for the growth. Like actually, NVIDIA is very inexpensive, but like a Cloudflare is at like a 9. Like some of these companies are at nuts. You add in the annual growth rate, you think the EPS is going to happen. But anyway, here's GWRE. Yeah, the word software is in their name. So, of course, they're going to get slapped because all of software is getting crushed the past couple months here. And it's not exactly like their fault. It's just the whole software industry. Like, check this out. This is a subscription model company, 63% of the revenue subscription. And that's the growth you want to see. Incredible. It's up 35%. After grew 39. After grew 39. It just hits a new record every year, every quarter. So insanely impressive over there. Then their services revenue is also at a record, up 22. Term licensing revenue, that's up 12% year over year. So I bet they're already profitable. Yeah. So that's the crazy part. Like the revenue's up 26. The net income's now profitable, 31 million. So what's the forward PE? I bet it's high, but it's because they're really just getting EPS positive. So yeah, 104 forward PE, but you know, they just got net income slash EPS positive. So probably by this time next year, they're going to be making way more consistent profits in EPS. And maybe this would be like a 50 forward PE. Yeah, the sentiment around software right now is not good, but they've been beating on every metric. They beat on revenue this quarter and the past 2 quarters. They beat on EPS by over double and on EBIT. Like, this is one to put on your watch list because, you know, they're falling just because of the sentiment around software. It's not like a them problem. Um, let's see here. Can you check out Bull? Hey, what's up, Rusto? Hey, man, can you please check out Bull? Yeah, let's check out that one. You know, we already looked at Webull 2 times, so I was kind of waiting to look at them again because we already looked at them. So if you give me a minute, maybe we'll get to them. We already got on more than 200% after the already explosive IPO. Okay, hey, what up, Judith? How's it going? Yeah, let me get to this next stock here that I saw. YSS new IPO. All right, let me try this one for you, man. York Space Systems. Oh, you're right. They literally just IPO'd. Literally just IPO'd. So yeah, we'll get to Webull after this. So yeah, York Space Systems just IPO'd. They're worth $4.2 billion. Normally what you see with the IPOs is they like go up a bunch, like $38, and they kind of fall down after their IPO. Do they have, again, the sad part is they just IPO'd, so we have no real data to look at here. I mean, we could see they did 76 million in revenue, but that's only one quarter. We can't really see the year-over-year comp there, but we can check out their website, York Space Systems. Look at the little satellite in the middle there. Okay. Why does it look so funny in low quality? I don't know. But anyway, some sort of like satellite space network company. Huh. They remind me of another. I think it's called Planet Labs. Yeah, someone said PL earlier. You know what? Planet Labs does the same thing. This one has this is a satellite company that actually partners with Google Maps. So, and actually Google loves them so much. If we go to the shareholders right here, Google, which is Alphabet, that's the parent company, owns 9.5% of all the shares here. And they do the same thing. You know, that was smart for them to IPO because all the space stocks are kind of booming right now. Rocket Lab, SpaceX is in talk. Yeah, they just launched 2 more Pelican satellites, and they get this like when whenever you go on Apple Maps, Google Maps, it's like actually like you can see pretty good quality when you zoom in. So yeah, they partnered with Google Maps, and Google owns 10% of all the shares here, and they've been booming too. So maybe look at all the what the competition's doing as well. So let me get to Bull right here. So Bull just hit an all-time low. So if you've ever bought Bull, you're down on your money, and that's me. I'm a shareholder of Bull, and even though Webull is at an all-time low, they're not a steal of a deal. Like you don't want to go crazy on Webull yet. They're still, what I'm trying to say is they're still expensive even at this all-time low level. But I still am bullish on them. I'm more bullish than the analysts are, so I actually do own Webull, but it's a super small size position. Like I could not trust more than like $500 in this stock. Like they are just so like risky in right now's environment. So yeah, we're down 18% on Webull right now. But here's why I'm more bullish than the analysts are on Webull, and why I think it's owning just as a very small amount. So I'll give you my thesis here. I actually use Webull. Here's my Webull app right here, ticker symbol Bull. I've been using their app for many, many years, since 2021. And I noticed they just added in prediction markets, crypto, advisory service, and Webull Premium, where you can pay them money every month. So they basically just added in all these new possible streams of new ways to make money. And that's what's making Robinhood stock rocket. Let me pull up Robinhood. The reason Robinhood stock has done so good is because they added in prediction markets and Robinhood Gold to the app. And basically, Webull is copying Robinhood's successful business model, and it's printing Robinhood money. Like Robinhood really does make like 500 million of real after-tax net income, and I think that profitability is soon going to come to Webull. So Webull's just like a smaller Robinhood. But even at all-time lows, it's expensive at like a 50 plus forward PE. So I don't own a lot of them. All right, let's see here. What's this one here? USAR super microcomputer. So super microcomputer, I actually used to own super micro. I actually just fully sold out of them. So I sadly sold out of super microcomputer because of one financial metric that's scaring me. So it's the margin collapse. Here's I'll kind of make this simple. We can see the revenue, just basic sales are down 15%. So the revenue's down 15, but the net income, the profits are down by 60. It's down by 60% year over year. So that means in English, the net margins are going down. So look at their net margin over time. Their net margin, used to be 7-8%. Now it's only at 3.35%. They're basically seeing a lot of they just do a commodity. They install your servers and chips for you to your data center, and they're having a lot of competition from Dell. And so basically Supermicro is having to giving customers these bulk deals where it's just crushing their margins. So that's what's kind of scaring me. Gross margins are down 28% after they fell 21%. Net margins down 53 after it fell 4. So it's just a tough margin environment for Supermicro, and that's why I think the stock has been struggling. They just don't have the pricing power. It's kind of just like a commodity stock almost now. But there is good news, and I hope they can meet these because they have been missing on expectations. Like last quarter, they expected $5.8 billion in revenue. They only literally did $5 billion in revenue. So they did miss on expectations bad this quarter. They missed on net income and on EBIT. So they've been missing on every metric every quarter by kind of a decent chunk. So we just don't want to see that trend continue. The expectations are good, but they might be too good because they always miss. So I just be really careful with super microcomputer. I'm kind of just avoiding them right now. I'd almost rather buy a Dell, but like even that one, like I just wanted to bring up that warning. Hopefully that was kind of helpful there. I know it wasn't probably too bullish there, but okay. Herx said, can we discuss Oklo? Sadly, I have nothing good to say about Oklo. So if you're looking for a nuclear stock, like a nuclear company to just buy and hold forever, that seems quality. Unfortunately, Oklo is not the pick for that. So this is a startup, a complete startup, no revenue. They literally will not have any revenue until 2030 at the least. So this is a company that's trying to make these SMRs, these small modular nuclear reactors. If you didn't know, like this is a whole proof of concept. Like there's only 2 working SMRs in the world and none of them are in the US. So it's just a tough one to pay. Like if we look at the market cap right here, this is a $12.5 billion company. I know many $12 billion companies, and one with no revenue. It was founded by Sam Altman, the OpenAI guy. So that's why there's like hype around this one. But there's just like, I don't see the value here. This is not a good nuclear stock. If I wanted a nuclear play, and I do, I love nuclear. I'm super bullish on them, not SMRs, but CEG is the best play. They already own over 30% of all the US's nuclear reactors. This is the purest play for nuclear by far. There isn't even a close second. There is no close second. This is the purest nuclear play by far out of any stock. They're at a 25 forward PE, which seems pretty fair to me. So best buyback, best dividend and M&A program. I think they're going to be the best performing utility. In full disclosure, I do own CEG, so I'm totally biased, but I own them for a reason because I think they're just so quality. Yeah, we got 15 shares in them. We're still up 36% on CEG, but I like them for that reason. Hey, what up, Stocks and Sports? Yo, we just looked at Palantir like literally 10 minutes ago. We'll get back to them in a minute here. If you want, though, I'm also streaming on YouTube. If you want to support me, by the way, I sell nothing. I have no course book. I'm also streaming on YouTube. So if you want, you can like watch the stream from YouTube, kind of rewind it, replay it if you missed anything. We'll get to Palantir in like 5 minutes if you remind me. But yeah, thanks again, Stocks and Sports Guy. If you got me another stock you may look at, let me know. Is CEG at a good entry price? I think it is. But to nibble on, don't go crazy into CEG yet, but definitely like maybe buy like the slightest bit. So Gary said OCG, and then Boeing stock. We'll check these out. I've never actually heard of this stock before. Oriental Culture. They're a penny stock now. Okay, dang. I've never seen this before. Look at the top right, the market cap. This whole entire company is worth $2.8 million. That's what the whole company's worth. $2 million. I mean, I'm sure someone in here is probably worth more than this whole company. I mean, and they have no revenue. Or look at these year-over-year declines. Like they used to have, for the full year 2021, they did 37 mil of revenue. Now for the full year 2024, they did 600K of revenue. So I can see why this company is basically worth nothing now and only worth $2 million because they have no revenue. The revenue's at zero, and these net income losses are too much to bear. Like, think about this logically. The whole company is worth $2.8 million, and it just lost $3.8 million. That's more than the whole company's worth. Luckily, actually, they have a good balance sheet, but I wonder if that's from stock issuance. So yeah, $38 million of cash. Well, that's actually interesting. That cash pile. I don't know. I wouldn't touch that one because literally the market cap's $2 million. I mean, we just those are just so risky, unfortunately, that maybe it's a fun little swing trade. Oh, yeah, we'll get to FJet. Let me get to Hubs. There's Hubs, Boeing, and there's FJet. I want to get to all these. Don't worry. We'll get to all we'll get to all these stocks here. Don't worry. We're going to be live for another 40 minutes. So if you have a stock you may look at, let me know. We'll definitely get to it. By the way, we stream every Sunday, every single day, actually. I try to. But every Sunday, this exact same time, we stream. Kind of looking at stocks to buy next week. So here's HubSpot. This is another software name. They're kind of like a smaller Salesforce. They kind of do exactly what Salesforce does, but they're smaller, like customer relations, stuff like that. So are they profitable yet? So basically, look at that. They just had their first ever quarter of profits. So they've never been profitable before today, but then this quarter, they did 12 million of profits. So you're basically buying a company as they just are finally making their first ever sort of profit. So that's why you can't really look at a forward PE because it's going to look insanely expensive. 157 or 147. Again, they just got their first ever EPS. So that's why it looks so expensive. So you really want to look at a 2 or 3 year out forward multiple on HubSpot. So yeah, dang, they're also at a 52-week low, just like Salesforce and ServiceNow. So yeah. Yeah, they really do like exactly what Salesforce does. So that's kind of what you're buying here. That's great revenue growth. Like that's what you want to see. That's impressive. The revenue, it hits a record every quarter, not just like the year over year, but like every quarter just hits a new record of revenue. It's really impressive. That's what you want to see for a growth stock. So great great revenue growth, and they're finally looks like they're getting profitable. So you want to see them finally make some real profits. Okay, so Boeing stock right here, BA. This one I don't love, and it's simply financials. Boeing projects 3,290 aircraft demand in India and South Asia over 20 years. Air India orders 30 Boeing 737 Maxes. I know now that a lot of the tariff fears are gone. Like a lot of countries, like for the US, are just ordering a bunch of, stuff. But yeah, here's the bad part about Boeing, in my opinion. Here is the net income. Or well, they had a one-time adjustment. Like you see how it says this quarter, like this is why this is a little sketchy. It says they made 8.2 billion of net income this quarter. They actually the core business lost money. They didn't actually. This was a total one-time adjustment. They did not make this at all. They lost money this quarter. They lost 800 mil. So that's the tough part about Boeing. They actually haven't made like any profits since we're all the way back in 2022. So since 2022, all the company has really done is just kind of burned like dang 800 mil, 5 billion, 200 mil. Then they made 400 mil, but then they lost 4 billion, another 5 billion, 1 billion. So all this company has just done is net. If you look at their retained earnings metric, accounting metric, their retained earnings just keep getting negative, 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 negative every quarter because they just burn money. So that's the scary part about Boeing. It's just the fact that they have no profits and they're really recession prone. Like in 20, they still haven't even recovered from 2020's pandemic. They're like still halfway. So these Boeing, I just don't think it's like an airline almost. Like these airline companies, they just don't outperform the S&P. I would not recommend Boeing if you're trying to like really outperform the tech heavy S&P 500. It's historically never done that, and I don't know if that's going to change now, especially with how their profits are looking very negative. So I feel so bad, but yeah, Boeing's just I don't like them. Let me check out FJet. So hopefully this is an aerospace one I'll like. FJET. And then we'll look at Berkshire Hathaway. Hey, that's a cool one. CRML, please. Yeah, we'll do that. What up, music? So Starfighters company, they're a small one. They're worth $300 million. They just IPO'd. So it's another one where since they just IPO'd literally a month ago, we're just not going to get that much data in terms of financial. Yeah, so if we go to revenue right here, it says no data because they just IPO'd, unfortunately. So they have a 12 million of assets. They lose 2 mil a quarter. And I don't know if they have revenue. So yeah, I can't really judge this one from a financial point of view. Maybe we can check out their website. Oh, so it's like another it's like another like satellite company or something like that. High demand commercial space activities. A fleet of 7 F-104 fighter jets, the only commercial fleet in the world, will be capable of launching payloads through Starfighter program. Minimal R&D. All right, well, anyway, we aim to be one of the most cost-effective launch providers. Current customers, including Lockheed Martin, GE Aerospace, Space Florida, U.S. Air Force Research Laboratories. So anyway, it all sounds good, but you just got to be so careful because they're just so small. It's not saying the amount of employees that they have, and they just IPO'd. So maybe it's fun to watch, 300 mil market cap. Let's see. What is CRML? CRML. Critical metals. So this might be one of the rare earth mineral plays. So yeah, whenever MP Materials got their 10% stake in from the government and all the like rare earth stocks rallied, so did this one. It follows exactly the momentum of just like all the other rare earth mineral stocks. So yeah, this one doesn't have any revenue. So yeah, if you go to the revenue, it says no data because they've never sold anything, not a product or a service. So they're still that like kind of a startup. So they have 4 employees. So this company has 4 employees, headquartered in British Virgin Islands in Tortalo Road Town. Huh. So anyway, some sort of rare earth mineral play that like still has no revenue. I don't know what mineral they're trying to mine. But anyway, some sort of like smaller, nichier, pure play rare earth mineral play that kind of just follows the momentum of like, I mean, look at LAC, for example. Yeah, like they rallied up when they did and then tanked. All right, let's look at some more here. How about Iris Energy, W Day, PayPal? Ooh, I like Cisco too. Let me start with Iris Energy here. So Iris Energy, I think still 80% of the revenue is still their Bitcoin mining revenue, but this company has converted their business from just mining Bitcoin to now cloud hosting. I think they have like a big deal with Microsoft. Cryptocurrency decline impacts Iris Energy and crypto related stocks. Yeah. Iris Energy doubles AI cloud capacity to 23,000 GPUs, targets 500 million in annual revenue. So let's see what their current revenue is. Yeah, the revenue growth has been explosive on this one. This quarter, they did just this quarter, 240 million. We have triple digit growth rates for the past 4 quarters in a row. So 240 million revenue this quarter. And they did lose money this quarter, but the past 3 quarters before this, they did make money. So and revenue is supposed to go to 280 million in 2 quarters. So yeah, they really are going to have like 500 million of annual revenue. Yeah, so basically, this is the metric you really look at, the earnings before interest taxes, because they had a one-time adjustment to their EPS. They expected 62 mil. They did only do 6 million. But anyway, that top line growth is insane, and they have like this backlog of orders. Like I think it's from Microsoft, if I remember correctly, like the Microsoft Azure cloud. So EBIT, oh, they're supposed to lose 12 million next quarter again. Oh yeah, I guess yeah, that does say that down there. Okay, well anyway, Iris Energy, it's one of those data center companies. They remind me just of a it's like these are the companies NVIDIA's trying to stimulate, CoreWeave, APLD, Nebius. All four of these companies, like Iris Energy, CoreWeave, APLD, Nebius, they all do the exact same thing. They all just own a bunch of, chips in a data center. But I don't know if I don't love the long-term outlook on these. Like they're kind of the bag holders in the long run. Chuck says Berkshire Hathaway. Yo, I love Berkshire Hathaway. So if you're looking for like an alternative to the S&P 500, Berkshire Hathaway has been one that has consistently outperformed the tech-heavy, S&P 500. So this is Warren Buffett's company, obviously. So they own some companies all like wholly, and then they own stakes in a bunch of different stocks. Like they have a 25% stake in Apple and a big stake in, Coca-Cola and a little bit of UNH and stuff. But then they fully own some businesses. Like they fully own Geico. Geico is their main business, their insurance businesses that does over 100 billion of annual revenue. They're in manufacturing. They own Pilot, like those gas stations, like those truck stops, Pilot truck stops, servicing retail. BNSF Railroad, I love that business. So this is just an alternative to the S&P 500, just like another basket of companies that should hopefully give you 8 to 10% returns a year consistently. Juan said PayPal, and then we'll get to Cisco. So PayPal, unfortunately, this stock is the same price that it was in 2017. So if you bought PayPal in 2017, it's the same price that it is today. And it's not just a PayPal problem, it's the whole industry. Like if we go to Cash App stock looks almost the exact same as PayPal. Cash App is the same price that it was in 2018. So this is Cash App stock or XYZ, 62% of the revenue is Cash App. But then PayPal, similar kind of industry, they own Venmo. I think they're just kind of being out innovated right now because it's kind of like a commodity. Like you send money from one person to another, or it's almost as simple as that, or from a business to a person, or like you pay for some of PayPal. Like the fees on this, fees historically should only go down for PayPal they're at this like commodity multiple, like this 9.9 forward PE on PayPal, but that's where the risk to reward starts to look very good. Like the risk to reward on PayPal is starting to look very good. Like they still print money. Like if we go to their bottom line here, this is crazy. They make over 1.2 billion of real net income a quarter. And what is PayPal doing with 1.2 billion in net income a quarter? Well, this is what's cool right now. At the top, they're actually doing share buybacks. Why did it remove the number there? That's weird. It used to. Did I click something for that to go away? I don't remember. Anyway, oh, there we go. So yeah, PayPal literally does 1.3 to 1.5 billion of share buybacks a quarter. They're basically spending all their net income buying back their own stock right now, which I get because the stock's at such a cheap price. And here's what that actually does for you. The net income grew 23% year over year, but the net income per share grew by 31. It grew much faster than the net income because the share part of the ratio went down. Again, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes is the share part of the ratio. Whenever you buy back your own shares, it makes the EPS go higher, PE ratio go lower, gives you more ownership in the company, makes the cost of dividend go down. So buybacks basically force the stock to go up. But in this case, it's forcing the stock to go up, but the fundamentals are just so bad that the stock just goes down anyway. But you get a dividend, you get a 1% dividend with PayPal, like 6% share buybacks a year. But we're really watching, the long-term projection, because they've had low single-digit growth. It's 5%, 1%, 4%, 5%, kind of like these low single-digit growth rates, which you kind of want to see pick up. But I like that they're doing acquisitions because I think instead of buybacks, they should be doing acquisitions, and it's gone now, but they just acquired this Israeli crypto company. Anyway, I'd be careful with PayPal. I keep the allocation of that one low. I still am not fully dismissing it because they still print money, do buybacks, dividends, and all that. but I keep the allocation that one just low. So Cisco right here, CSCO. This is a nice uh dividend growth stock. Finally at the year 2000.com bubble price. If we look at the dividend, if you buy the stock right now, basically at all-time highs, you still get over 2% of your money back just in a dividend every year. And check out the forward PE. They trade at 26 times forward earnings. That implies to me like Cisco, this could stretch up to like a 28 or 29 forward PE, like pretty easily. And I love specifically on them their acquisition of Splunk. So they're actually been getting into cybersecurity now. So if we go to their security revenue right here, like check out the bump from like 2024 it was 5 billion. Now it's 8 billion of revenue. That was from the Splunk acquisition, which I like. That's where a lot of that growth came from. But if we just go to the bottom line, simple metric here, just net income, after tax net income, the before tax number was 3.5 billion. The after tax is 2.9 billion. They are making 2.9 bill a quarter, and their dividend only cost 1.62 billion a quarter. So since the dividend costs a little, they have a lot of leftover money for buybacks. They do 1 to 2 billion a share buybacks a quarter. So weirdly, they're really boring kind of, but Cisco, but I like the fundamentals here. I wouldn't even call you crazy to buy this one at their current price. I'd probably wait for it to maybe fall back to this, $75 level for more safer entry. But I really like Cisco. Lance said, CoreWeave, Rubrik, Astera. Let me do Astera Labs. This is actually a very cool company. This one just has the most impressive growth rates I've ever seen for a company. Like if we just go to the analyst expectations, this is why this one's so cool to me. And one of the reasons why the stock is falling is simply because of valuation. Like they're not falling because the fundamentals are falling. They're falling because the valuation, even at right now prices, is high. Like they have a Palantir type valuation, but they deserve a Palantir type valuation because look at this. They beat like crazy every quarter. Like they beat on revenue. The EPS beat was crazy. They beat by double. They expected 23 cents. They did 50. And at this beat, like they're going to be beating like crazy the next quarters, which sends the forward PE even down a bunch. And this was just a one-time adjustment. Like they really did beat that much on earnings. Like if you go to the EBIT right here, basically earnings before interest and taxes, you can't non-dilutive, like adjustable, like the EPS can, it beat like crazy. Like it really was a triple beat quarter. The revenue is up triple digits for the past 4 quarters in a row. Like that's what look at that revenue growth. So the revenue's at a record and the profits are now too. They're profitable and not just a little bit, but they literally made 91 mil this quarter, 52 mil last quarter with a huge cherry on top is this fortress balance sheet. This takes a lot of risk off the table, big safety net, just to owe nobody any money. They're debt free. Let's see how much cash they have. 1.13 bill of cash. That cash is earning interest too. That 1.1 bill of cash earns them 10 million of just interest a quarter, which just adds even more to your bottom line. Astera Labs, they're on my watch list. I recommend putting it on your watch list too. And again, even on their dip, there's not super cheap at a 99 forward PE, but they deserve it. They deserve it. They're so quality. Plug your charger up. Yeah, yeah, my phone's getting low here. Okay. Aaron, what's up, Aaron? He says ARM right here. So this is actually a unique royalty company. A lot of people don't know this, but ARM, they make these energy efficient chips. Like every Apple iPhone now has an ARM chip in it. They are actually, believe it or not, a royalty company. So here's ARM. 60% of the revenue comes from their royalty revenue. And then the other half of the business comes from their licensing revenue, which are both super high margin businesses. So if we go to their gross margin right here, this is Reddit type margins, 98% gross margins. Basically cost nothing to run this company. The net margins are around like 10 to 20% right now, which should only improve in the future. So yeah, right now, if we go to their bottom line and look at the revenue, the revenue's up 34.4%. So revenue's up 34 and the net income's up 122. They print 100 to 200 million net income a quarter, plus a super good balance sheet. Like, I just love the margins. Like it's like a unique, like royalty, high margin company. Oh wow, SoftBank owns 86% of the shares. So that means only like 15% of the shares are available to trade. What's the free flow there? Yeah, look at that. The market cap is 111 billion, but the market cap available to trade is only 14 billion. Yeah. Wow. Wow. Okay, anyway, ARM, I love this name. They're still expensive though at current prices. A 93 forward PE, kind of like Astera Labs, but they deserve it for their business model. So quality. Josh said, "Do you see Calm as a dividend play or a growth company?" I see Calm as a well, it's kind of both. It's I do own Calm, by the way. This is a chicken egg commodity company. So they literally have a 25% market share for chicken eggs in the US. So it's literally just a pure commodity play. And that's why they traded a low multiple. That's also why you cannot have this as a big size position because they're so commodity related. It's a commodity stock. Conventional shell egg sales, specialty shell egg sales. So as we know, a year ago, the prices of eggs were nuts per like dozen, but now the prices have started to normalize. So, it's a tough comp. That's why the revenue's down 20% because it was artificially high a year ago. But revenue's down 20%. What's cool about this stock is their dividend rule. If we go to their dividend, it changes every quarter. Like it was $3, $1.50, $2.35, $1.30. It changes every quarter based off how much net income they make. So they have a rule where they only pay out around 33% of whatever the EPS is every quarter. So that's kind of a cool rule where their dividend changes every quarter. You never know what you're gonna get. This is my favorite part. The best part about Call, because I normally don't like these commodity stocks, but this is the big, takes a lot of risk off the table. Remember this market cap. The whole company, will just round it up to $4 billion. So this whole company is worth $4 billion. Here's a crazy thing. They actually have $1.15 billion of cash and no debt. So well over 25% of what you're paying, the whole market cap is literally just their cash on hand. And their cash on hand earns interest as well. So anyway, yeah, they still made, 100 mil in net income this quarter. So yeah, Calmain's pretty cool, and they're diversifying into like prepared foods. So that grew 580% year over year. They just started this business, and it's already up 580% because they're building out this business. So anyway, Calmain, I like my favorite like egg play. There's another like egg stock, but they're not nearly anywhere near as quality as Calmain is. That's the best one in my opinion. We're only up 3% on them. We get a little dividend. So yeah, I wouldn't have it as a big size position because it's commodity related, but they're cool. Hopefully, yeah, that's kind of a cool stock you maybe never heard of before. No way, yo. Shout out to the legend Aaron on the YouTube stream with the $1.99 super chat. Man, I really appreciate you, Aaron. If you got another stock you want to look at, let me know. I got you. I'm trying to add on this dip. I like these picks for AI wins. Yeah, hey, me too, Lance. I appreciate you. SoFi might be smoked. I added in. Average up. Greed is real. Hey, yeah, SoFi. Should we go over SoFi again? I actually really like SoFi. PayPal earnings are on Tuesday. Oh, I didn't know it was on Tuesday. We get Palantir Monday, Disney Monday, then Tuesday, and then Wednesday's Google, Thursday's, I can pull up the earnings hub super quick because I know no one probably cares about this. But yeah, next week's a super big week in the market. Palantir's on Monday, Disney, then Tuesday is AMD, Nintendo, PayPal, then Wednesday is Google, AbbVie, Novo Nordisk, Uber. Dang. Wow, there's a lot of stuff on Wednesday. Then Thursday, there's Amazon, ICE. Anyway, let's get back to y'all's stocks here. Thanks again, Aaron. If you got another stock, I got you. I do appreciate that. So can you do Roblox when you have time? Thanks. Yeah, let's do Roblox right here. We appreciate that. Thanks. What's up, Larry? And no problem, Outwork. I appreciate you. Then we'll do Take Two after this. And Num. Oh, dude, remind me to do SK or SYK after this, Num. Forgot about that one. So Roblox, that's one of the game companies that tanked because actually, Google's getting into this space. Google's getting into the game developing market. They originally had something called Google Stadia. If anyone remembers Google Stadia, Google's always failed every time they get into like the game industry, but actually it ended up working out for them because that Google Stadia ended up becoming the Google Cloud. So anyway, here's Roblox right here. They're down 13% on Friday. If I was going to buy the dip on a game company, I'd buy AppLovin on the dip. I would not buy Roblox, and it's only for this reason right here. There's some good news and bad news, but here's the bad news. Roblox is a big money loser. They're nowhere even near profitability. The sad part is Roblox loses 250 to 200 mil a quarter. Like in the losses worsened year over year too. So that's kind of the tough part. Roblox, like just for all of time, like look at these net income losses. Every quarter just loses 200 to 300 mil. And it's tough to afford these net income losses. So that's why their balance sheet's really leveraged. They have a lot of debt to pay. And how are you going to pay off all this debt when you lose more and more every quarter? So what you want to see is Roblox really start to narrow these losses, which hasn't happened yet. But one impressive thing about Roblox, which is impressive, is actually, and I don't know if this is propped up on AI bots, but look at their daily active users just quarter over quarter. It went from 111 million to 151 million just quarter over quarter. I don't know how, but they really did, I guess, grow their daily active users that amount. So yeah, there's obviously no forward PE on Roblox because they're not going to make any net income anytime soon. So that's the only thing that concerns me is the net income losses. But they have nice growth, daily active users growth, the revenue growth, but just the net income losses that scare me. That's why if I was looking for one to buy the dip on, AppLovin is a steal of a deal. I think a much, much, much better buy than Roblox. Look at their net income. This is what I love about, this is what I look for in a stock. Like a company with this sort of net income, the net income growth, the net income's up 92, the revenue's up 68, so that means margins are expanding. This company literally runs at a 60% net margin, a higher net margin than NVIDIA, and that's after they pay taxes. Like the before tax number was 1.08 billion, the after tax number was 835 mil. Like the EPS was a record quarter, like $2.45 of EPS this quarter. It's supposed to be next quarter, 295, and then 315. So if I'm looking for a game stock to buy the dip on that also fell crazy, check out AppLovin. I wouldn't buy Unity either. Sadly, I looked into Unity. Unity's really bad too. But I don't know why Unity and AppLovin stock tanks so much on the Google News because that's only like 30% of their revenues. Most of it's advertising. So yeah, there's AppLovin. I really like that one. Let me do TTWO real quick. So this is a gaming company. You probably heard of their games before. Rockstar Games, which is GTA 5, GTA 6. I think they own a lot of what are those, like 2K, I'm pretty sure. I think they might own The Sims as well. But anyway, they own Rockstar Games. And as we know, there's basically this growth catalyst coming for Take-Two. As we know, GTA 6 is going to be released. They said November of this year. Who knows if it'll get delayed again. But basically November of this year, or very soon, well, not very soon, but they have this catalyst happening where as soon as they release this game, this asset, it's going to bring them in billions of revenue instantly and billions of reoccurring revenue from GTA 6. It's literally supposed to be one of the top 5 biggest games in all of history. So right now, if we go to Take-Two's net income, they lose money every quarter. They don't make any money and oh, wow. Is that true? They haven't made a single dollar of net income in years. So they're burning a lot of money. It's really, I wouldn't buy Take-Two because I think the growth is priced in. They don't make any money yet. And I think all analysts know about GTA 6 that's going to come out. So I would be careful at Take-Two at current prices. They fell, of course, on the Google News as well. I would be careful because, of course, there is no forward PE. They're worth 40 billion, but you're watching GTA 5 and you really just want to hold this stock until, maybe they beat on their original expectations on GTA 5. Who knows? It's just, or GTA 6, I mean to say. So whatever that does. Larry said SoundHound AI. I'll be super quick with this one because I sadly don't have much good to say about this one because I think they're just going to get out innovated. I've been on their website before. You basically just SoundHound AI, you give this company, or you go to their website and you talk, and it's a subscription model company. So 80% of the revenue is their subscription business. You pay them a subscription and you give them a bunch of your voice's data, and then you give it a prompt and whatever you type in text, it'll say in your voice. And I still think it sounds AI, so I don't think it's perfect yet. But here's the hype around SoundHound AI. If you're a shareholder of this stock, there's only one metric you want to watch, and that's just subscription revenue because it's been booming. I mean, tremendously. Like in 2023, it was a nothing burger. It was $400K of revenue a quarter, but now it's 33 million this quarter. Subscription revenue is kind of reoccurring. So that grew 80%. After grew 3,700%. So they're on a streak of subscription revenue growth. That's why there's been momentum around SoundHound AI. NVIDIA actually used to own this stock around here. NVIDIA completely sold out of their stake of SoundHound AI just because Apple actually does this for free on the Apple settings. You can go into there, give it a bunch of your voice's data, and it'll replicate your voice too. I think just the business model of replicating your voice with text is gonna get out innovated, and I think it's a tough one because but you watch the top line revenue because the growth is good, 67% revenue growth. But the bad news is I don't know how, maybe just storing all the data, but they lose 50 million a quarter. That's the bad news there. So they're losing 50 mil a quarter. They have nice top line sales growth, but it's a tough industry, I think. Cool stock though, but tough industry in the long run. Oh, SYK, my bad there. Thanks for reminding me there, Num. Sorry if I'm missing some stocks here. I'm trying to get to everyone's stock. I appreciate everyone being here. By the way, I stream every single day at or I stream every Sunday this exact same time, but I also stream every day. I sell absolutely nothing at all. I have no course book. What's up? I don't coach. Someone's asking me, how can I learn? The only way to learn from me is just, I guess, watch my videos and watch the streams because I sell absolutely nothing. I'm just on here giving my opinion. None of this is financial advice. I'm not an expert. So here's Stryker Corp. They're worth $141 billion. They're near an all-time high. I guess this brokerage is telling me that there's a double bottom, I guess, forming here with a 95% rise probability. But let's go see what they do. Oh, med surge and neurotechnology. Seems nichey. That's up double digits, up 14% after grew 16, after grew 10. So yeah, nice double-digit growth there. And the orthopedics, orthopedics, I'm probably saying that wrong, but that's 37% of the revenue. Let's see. Oh, wait. That's impressive. So the revenue year over year grew 11%. So the revenue's up 11, but the net income. Sorry, if it just cut out for 5 seconds, that's my bad. My thing stopped there. Okay, we're finally back. Sorry if it froze. We're fully back. Revenue grew 11, but the net income grew by 55. That means margin expansion. The net margins year over year, let's see, the net margin went from an 8.5 to an 11.8. So they are seeing a nice improvement to the business as well. So that's good. So revenue's up, profits are up even more. And they really were on operating profit and net income. Decent balance sheet. Do you get a dividend? Yeah, you get a 0.9% dividend yield here. So yeah, I guess this is an interesting way to get exposure to like med surge, neurotechnology, orthopedics play. And look at that. Current PE is a 43, but the forward PE is way cheaper, a 31 forward PE. So I guess there's a lot of EPS growth expected. Huh. Interesting. Wonder, is there any kind of research on this company? Nope. Well, anyway, they just reported earnings. Oh, they just reported earnings. Nice. I'm gonna check out CB. What up, Remco? Good to see you, man. And just wanted input on EEM. Appreciate you. Remind me to get to EMM, please. Dang, I'm actually like behind on the chat. I've never been this behind here. I appreciate everyone here. Wait, CB stock. Oh, this is Chubb. Warren Buffett just bought this stock, actually. Warren Buffett is a shareholder. This is an insurance company, actually. I really like insurance companies. Those are the companies that just print money, raising their premiums on us every month. But yeah, so they have a 1.2% dividend. I believe they're like a casualty insurance or property and casualty insurance company. Yeah, they're in the Warren Buffett portfolio. And what's the valuation? Usually these trade cheap. Yeah, look at that. Even though this stock's at an all-time high, these insurance, the whole industry just trades cheap. They're at an 11.7 forward PE. That's, industry average is an 11.12. They're at a 12.9, but they're super quality. They're so quality that even Warren Buffett bought them. So yeah, property and casualty insurance. They're also in life insurance, North America property and casualty insurance. So anyway, let's see their bottom line. Yeah, look at this. So they make on average every quarter, call it 2.5 to 3 billion of real net income a quarter. So that's great. And you get a dividend even at all-time highs. You get a 1.21% dividend. Look at the payout ratio. Only a 15% payout ratio for a 1.2% dividend yield. Actually, Apple has a 17% payout ratio for only a 0.6% yield. So you get double the yield, but the same payout ratio with Chubb, just because the PE multiple is cheap. Anyway, I have no complaints about this one. We could actually pull up the Buffett portfolio. Oh, that's not Buffett. Where's Warren Buffett? Yeah, Warren Buffett right here. He actually just bought Google. Like at his newest position in terms of never owned before, he actually just bought Google for the first time ever. He's never previously owned Google. He sold out of D.R. Horton. Yeah, look at that. So Chubb, in the most recent quarter, he actually bought 4.3 million shares of Chubb stock. So interesting there for Berkshire Hathaway / Buffett. I don't know what I just clicked there. Okay. Now I have to sub. You're awesome. Hey, I appreciate you, Lance. Yeah, if y'all want to hit the follow button, subscribe button, we stream every day. I try to at least. We just look at stocks and stuff. Oh, hey, MC, are you still in here, MC? Let me know if you want me to look at MS stock. So, I love your lives and TA, one of the best. Hey, I really appreciate you in lives. I'm actually going to give you a follow. I appreciate the nice words there. I know you've been here for a while. So let's see here. Uh, what was this next one? Dirtbag said DFTX here. Let's check out DFTX. So this is Defium Therapeutics. So a small one, well, not so small. They're worth $1.6 billion. Let's see if that's justified. So they actually have no revenue. So they're a startup. We go to the revenue right here. It says no data, or let me go over here. It says no data because they've never sold anything. They've never sold a product or a service. So they're in like startup phase. But maybe the reason they've been rallying up is because maybe they had some positive trial results, or maybe they got FDA approval. Maybe they're close to selling something. I don't know why this momentum's happening so they have no revenue. And here's the bad part. They lost 67 mil this quarter, 50 mil last quarter. And whenever you lose net income like this, that money has to come from somewhere. So when we go to their balance sheet, look at this. The assets are shrinking and the liabilities are rising. So look at that ratio on the right, the 44% liability ratio versus an 18% last year. So these net income losses are really hurting them. Like they really, really, really need to start selling something soon and narrowing these losses soon to fix their balance sheet, because they're going to need to raise cash either by issuing stock or debt. I don't like the situation this company's in, just from a pure financial point of view. But the stock's at a new like multi-year high, 2-year high. So congrats if you own this one. But the fundamentals do scare me there because they still just don't have any revenue. So yeah. So MS stock. So Morgan Stanley, that's that bank. Yeah. Weirdly, the banks have been doing incredible, like all-time high on Morgan Stanley. Like a Goldman Sachs, boring GS stock, all-time high. So these boring banks have been doing great, and even though they're at all-time highs, they're still pretty cheap, like in terms of valuation. Yeah, 16 forward PE on Morgan Stanley. And because of that, you get good yields. Whenever they have a low multiple, they can pay out a little bit amount of money and still have a high yield. So even though this stock has had massive appreciation and is at an all-time high pretty much, even if you buy it now, you still get 2.1% of your money back just in a dividend every year. And they raise their dividend every year faster than inflation. So that's pretty cool. Oh, they're in wealth management. So wealth management, every time, whenever you manage assets, every year you just collect a little fee off of it. And so their wealth management, this looks incredible. It's up, only green in the middle here. It's up 13% year over year after 13% growth. So nice growth over there. So if we go to their net income right here, it's just so good, these year over year growth rates. They're easily making over $4 billion of real after-tax net income. And we can just kind of see the trend of the net income. It's gotten better these past 2 years. So yeah, nothing to complain about there. Kind of like a JP Morgan too. Let's see. Yeah, hey, just call. No, I need to plug in my phone. Luckily, we're only going to be live for another 20 minutes, and I think we'll last it. So yeah, sadly I have to go. Dang, we've been live for an hour and 57 minutes. We're gonna stream all the way to 2:00 because then I got to go at 2. But I'll probably try and do another live stream later today. So Grab stock, yeah, let me do Grab real quick. So this is what I call international Uber. So this company does exactly what Uber does, but internationally. So they do ride sharing. But look at the countries they're in, Malaysia, Indonesia, Singapore, Philippines, Thailand. Notice the US and Canada isn't on here. It's like a pure international play for the universally needed commodity of ride sharing. So if we go to the shareholders here, this is my favorite part. It actually makes me bullish on Uber stock too. I'm bullish on Uber and Grab, but Uber's the largest shareholder. Uber owns 13% of all the shares. And Uber, most of their revenue comes from, North America, like a little bit EU, but like UK. But Grab, your Uber buying Grab gives them instant international diversification. Also, Toyota Motor owns 5.5% of all the shares here, and they're finally profitable. If we zoom out, for the longest time, this was an impossible buy. They lost a lot of money every quarter, but now they're making net income every quarter. They're printing free cash flow. The analyst expectations are up and to the right. They're still expensive because they're just now getting net income positive. Yeah, like the forward PE is at 54, but look what it is right now, a 215. So they're having this year's, crazy growth. So I think the risk to reward on Grab is very fair. Same with Uber. Uber is even actually a safer buy than Grab would be Uber, because Uber is super cheap at a 24 forward PE. So Uber's both are great. All right. Um, Look at KNSL. Hey, that's actually hey, actually, Michael, if you go to the very beginning of the stream, the very first stock we look at, we deep dive into KNSL, the very, very first stock we ever look at on the stream. By the way, if you miss anything, I best way to support me for everyone on TikTok is to watch the stream from YouTube. I'm trying to build on my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. You just type into YouTube Nathan Robert. I'm also streaming on there. But super quickly on Kinsale Capital, look at like the stock has been flat for a year, but the past 2 quarters paints a different story. They expected 446 mil of revenue this quarter. They did 497. An incredible beat on revenue, and not just an incredible beat on revenue, but an incredible beat on net income. They expected $4.80 of net income per share, but they did $6.09. And it's not just like they beat just this quarter, like they beat every quarter. It's not some one-time adjustment. Like they really do have these big beats. So that's what, like, here's what justifies like you buying the stock. I mean, the net income is at a record. It's never been higher than what it was today. So, and look at the valuation here. The forward PE is a 19. And that 19 forward PE uses these orange numbers, this $5.22. And historically, they beat by a good chunk on EPS. So, like, and this quarter specifically, so who knows? Maybe they're at like a 15 forward PE if everything goes right. So there you go. That's a cool little growth name you could add to your watches. I always want to try and introduce you to hopefully some new stocks you probably never heard of before. KNSL seems pretty cool. They're like I think they're in insurance. They're either insurance or like lending, and some kind of like pseudo BDC. Inflection going public through their merger CCCX. Churchill Capital. Huh. I've not heard of this before, but I don't know what inflection is, but they're supposed to be. Yeah, so this is a blank check company. I'm almost certain. Yeah, blank check company, which basically means they just buy like other companies or buy shares of other stocks and equities. And it's just like, that's the company now. So it's kind of like almost like a Berkshire Hathaway where it like owns a bunch of stuff under it. So I guess they're buying some sort of company. I don't know what that company does. I wish I could give you thoughts on them, but they don't have any like numbers to look at. Snowflake. So yeah, Snowflake, this is like a Palantir competitor. Like they do the same thing Palantir does. But the bad thing about Snowflake is the money they lose. Like they have the best top line growth. Actually, let me show you the growth first, because this is what I love to see. This is what you want to see and trust for a growth name with the high multiple. Just insane growth where the revenue, the sales just hit a new record every quarter, every year. But there's bad news. The only thing bad news here is the bottom line, the net income. So they lose quite a bit of money, a couple $100 million a quarter. Actually, it has narrowed a little bit, 11% narrowance from the previous year. But yeah, they lose like $300+ million of net income a quarter. We want to see those losses narrow. But I love the revenue growth. I love their customers. A lot of the S&P 500 are customers of Snowflake. Snowflake launches energy solutions to modernize energy sector. Okay. Top infrastructure software pick for 2026. Lowers price target to 275. Well, 275 is still a massive increase from current prices. So yeah, I love the top line growth, but I don't love the net income losses. And that almost makes me like Palantir more. The Snowflake and Palantir really focus on the enterprise rich customers. UiPath is like a smaller play than Snowflake that focuses on the small and medium-sized businesses and developers. So yeah, Snowflake, they're interesting. They're a real AI play, like real use for your data. Okay. You think the market will keep dumping tomorrow? It's not the same as Palantir. Yeah, they're not. Yeah, they're not the same thing as Palantir, but yeah. You think the market will keep dumping tomorrow? What we saw with crypto is, crypto, Bitcoin's kind of like a high beta NASDAQ almost, and we see crypto. Oh my goodness. Let me just type in Bitcoin. How's Bitcoin doing right now? Oh my goodness. It's pulling up Bitcoin Cash. You know what? This is why I hate Webull. It just doesn't want to pull up Bitcoin. Let me do it on over here. There we go. So yeah, look at Bitcoin right now. That's the NASDAQ closed here. So we're probably, sadly, we might be down 1% on the NASDAQ tomorrow. Who knows? Which will just give us better opportunities to buy the dip on great stocks. Someone says, Snow is in the cloud data business. Palantir is like a government surveillance AI company. Yeah, like 50% of Palantir's revenue comes from the government. Then like the other half is the commercial companies like Snowflake. Let's see. Hey, what up, SL86? How's it going? What are your thoughts on these super beatdown software names? Adobe, Salesforce, ServiceNow. Yeah, actually, I am quite. There's some I'm bullish on, and there's some I'm not bullish on. I have a whole software video. If you actually want to check it out, my second most recent YouTube video, it's 10 software stocks to buy now. And we go over all these. We go over Duolingo, Salesforce, GoDaddy, ServiceNow, Fortinet. Actually, Fortinet is my very favorite software stock to buy the dip on. And they're not falling as much because they're way more quality. But yeah, I think ServiceNow and Salesforce are, you don't go crazy in Salesforce yet. Like if you want Salesforce as 5% of your portfolio, you don't make it 5% today, but you go ahead and make it 1% because they're already at like a 25 forward PE or 27. So Salesforce I do like, but not going crazy into them yet. But yeah, it's not just like a Salesforce issue. It's all the software. Like GoDaddy's at a 52-week low, DocuSign's at a multi-year low. Duolingo is too. Should we get into Duolingo? Well, kind of that language learning app. What is Biogen? I don't know what Biogen is, unfortunately. Hey, shout out to Charlie. He said Xena. She haven't heard of this stock before. Xena Tech. They're a small one. They're only worth $160 million. So do beware. That's just such a small market cap. And they're a Canadian company, so we'll convert the currency to US dollars just to get a slight better eye picture. So they're a drone company. Okay, you know what I've seen right now is with China and their drone manufacturing, they're printing out these drones like for dog cheap. Like I don't know what the net margin in game on some of these drone companies are. I am a little worried about that. I do have some drone plays I like, but this one just has gotten their first ever sort of revenue, like $3 million of revenue this quarter. Did analysts expect that? So yeah, I guess next quarter is supposed to be $4 million and then $5 million. So I can see why they're only worth $160 million because the annual revenue is like $20 million here. So they're losing a bit of money, but not that much, $8 million. The losses are getting worse though, so you definitely want to keep an eye on that. I don't know. Drone as a service, so it's some sort of drone play. Xena Tech. Maybe you can check out their website right here, something like that. I guess agriculture defense. They have why does their images look kind of bad? But there's another, I forget. It's like, I don't think it's Redwire. Some other drone stock I like that I think is a bit safer. They have that government contract. I'm like, I cannot remember it for the life of me. They made that Black Widow drone. It's like, maybe it's Redwire and I just don't remember, but BTC has been selling off all weekend. This is bad news for the market. Yeah, Bitcoin usually, it's not exact, but it usually trades as like a high momentum, like a triple NASDAQ. So if you go to a TQQQ, which is the triple QQQ, well, I guess it's not perfect yet, but usually Bitcoin is almost like a triple beta to the NASDAQ. So it is obviously not perfect, but it usually like rhymes together. But anyway, yeah, we'll watch that. And yo, no way, Aaron again, dude. Shout out Aaron on the YouTube stream, said AMTM. Let's do that one real quick, AMTM, because I have to go in literally 4 minutes, sadly. So this will probably be one of the last stocks we look at. Yeah, maybe it's Redwire, but I don't think it's Redwire. That's not sounding right. They make the Black Widow drone for NATO. But anyway, here's Amentum Holdings right here. They reported earnings this day, and they gapped up, and they've just been up ever since. So let's go see what their earnings were, and they report earnings on the 12th. So, wow. I can see why they gapped up so much. They expected $3.6 billion. They did $3.9 billion of revenue. An insane beat there. So was that from an acquisition maybe? No, so that was all just like organic growth. So yeah, revenue grew 77%. They actually are made net income. They made $37 million of net income on that. Look at the narrow here. Like if we zoom out to the previous year, they lost money every quarter, but now they actually made money every quarter. Well, I guess they lost 1 million, but they're making money every quarter on average, which is good. Global engineering solutions and digital solutions. So yeah, I can see why they gapped up on that day. It really was a nice beat on earnings. Maybe we can go to their website really quickly to learn a bit more about what they do. Expands UK nuclear energy specialist services portfolio with 730 million major contract wins. When they win $207 million contract from Dutch government new nuclear program. Amentum and Rolls-Royce form SMR, so small modular reactor. So maybe this is a nuclear company. Yeah, look at this. Maybe they're in the nuclear industry right here. So yeah, they support nuclear programs with rigorous safety, specialized engineering. So maybe they do like build #1 military-friendly employer. So it's actually, you know what? I'll put them on my watch list. I do like the nuclear industry, and maybe they're helping out these nuclear plants, uh, building them safer and better. So, thanks for that one. I like that one. Thanks, Aaron. I appreciate that. I'm glad I got to look into them a little more. Okay, I can look at like one. Oh yeah, this it's Red Cat. It's not Red Wire. It's Red Cat. Yo, thanks Charlie and Bruce. I do appreciate y'all. Yeah, this is the company. They make this Black Widow drone and these other drones, and they sell them to NATO, where they really do have these crazy contracts. Where check out the expectations here. This is another one where it's small revenue now, but look at the expectations. Like they had a record 9 mil of revenue. Like if we zoom out, this was a record quarter. They did 9.65 mil of revenue. So this quarter was a record 9.65 million. Well, next quarter they're expecting 25 million. And then 23 million the next quarter. So they're going to have like 100 million of annual revenue. This one might be a bit of a better drone play. I don't know, but I do know they have great government contracts and they're deeply integrated because they got like literal NATO approval for a lot of their like products. So yeah, there you go. Family of Shields. Axon is a nice drone defense company. Okay, so yeah, that's that company. Okay, I have to go in like 2 minutes. Let's see if we can get like one or two more here. Ticker BIIB. Did I ever do Snapchat? No, I have not done Snapchat because that one just is not good, sadly. Maybe we can check that one out. So Biogen, $26 billion company, big market cap actually. So revenue from CD20 therapeutic program. So basically this company sells a bunch of different prescriptions like Tysarbi. That one's up 6%. Spinraza down 1%. Vumixera, that's up 35%. So when we combine all their businesses together, their total revenue combined is up 2.7%. So, kind of single digit growth. That might be why the stock has been struggling on the weekly chart here because of single digit growth. Let me zoom out even more on the revenue. So yeah, look at this revenue. Okay, this starts to paint a better picture when we zoom out. The revenue has just been on a decline since COVID. So revenue's down and only growing low single digits. And look at the profits too. Profits are down bad since 2020. So it's starting to make sense. Like the net income isn't what it used to be in 2020. So the stock isn't where it used to be in 2020. That's why the stock looks so kind of bad. Dang, this stock is the same price that it was in 2013. So over a decade ago. And it's starting to make sense, because the revenue's down and the profits are down. So that's all you got to watch there. Maybe the growth will come back though. Who knows? And then let me get to Snapchat as final one here. Oh my gosh, I got to go quick. Snapchat, I can totally see as well as why this stock is at an all-time low. Dude, the freaking CEO and the team just makes billions. And the shareholders have no voting rights, no rights at all. The insiders make all the decisions and they just pay themselves so much stock-based comp to where their net income almost looks identical to the stock-based comp that they give to their team. So the whole reason this company is so net income negative is because the team is just paying themselves a bunch of money. So yeah, they're still pretty far from profitability. They still lose, 100 to 200 mil in net income a quarter. That's the tough part about Snapchat. And Snapchat just did something where you basically have to pay to see your memories now. Snapchat too establishes specs for AR glasses. Yeah, they're kind of getting to the meta space, I think originally like Meta Ray-Bans like copied Snapchat's original concept of their glasses. And then anyway, but yeah, Tencent's the largest shareholder here. Anyway, I sadly do not like Snapchat because of the net income losses. But anyway, thank you very much for everyone here. If you want to hit the follow button, we stream every Sunday, this exact same time, and we stream every day. If you want to support me the most, the only way to support me, because I sell nothing, is subscribe to my YouTube channel. My YouTube channel is called Nathan Roberts. Also in the link tree in my bio. You can just type into YouTube Nathan Robert. But I sadly have to go right now. Thank you so much for everyone that's here. See you soon. And thank you to everyone specifically on the YouTube stream. And shout out Aaron for the crazy super chats. All the members, Charlie, Bruce, Six Star, Num, Lance, Outwork, Riaz. I appreciate everyone that's here. Gotta go. I might do another live stream tonight.